I hope my presentation is visible.
Yes, sir.
Okay, thank you.
Visual, sir.
Thank you. Thank you. Okay, so disciplinary cases, as I said, we'll start first. Important point here, I'm saying discussion. So there would be some aspects, maybe I might have missed it. I know we have very senior members right now attending this session. So in case if you have some insights, please feel free to share, or maybe you can also correct me if in case you think that this is how the interpretation should have been there. Also, I have tried to avoid the names of the RVs and RVs wherever possible, but might be in case it might have just slipped through. My intention is not to actually show which RV has defaulted out that. The intention is to understand and what are the learnings from us that we should avoid such situations. So to start with, what we will do is first we will start with the RVE. So this is one of the RVs, and all these disciplinary cases are actually being pronounced in February 2023. So first one was the RVE, and this was the final order. It says that this RV will not seek or accept any assignment or render any services under the code for the period of 6 months. So it is actually a very, very strong order. And it's very important to understand each and every aspect. So the way I've put it, the presentation is that first we will see what are the contraventions. One. Second, we'll see both the sides. First is what exactly the RVE or the RV wanted to share to the disciplinary committee, and then concluding what is the findings. And this is the final order which we see on the statement. So we'll go through each and every contravention, understand them in detail. So to start with, let's look at the first contravention for RVE. So before I thought getting into this contravention, I thought let me check. Anybody knows what is the meaning of synergy value? You can put it on the chat also, or if you want, you can unmute also. What exactly is synergy value? Anybody?
Synergy means when two entities becomes a single work is single, and their values is improved because of total sum of their total value.
Absolutely right. Absolutely. So when two entities combine or companies combine, obviously there will be a change in the performance, and that will bring synergy. And as you very rightly said, it will eventually have a synergy value. So valuation also would be high. Surya Narayan has put it very interestingly, 2 + 2 = 5. Yeah, so very correct. So this we discussed what exactly would be synergy value. Now, the second question is in a group insolvency case, I'm sure you all know what is a group insolvency case, wherever there is an entire group of companies which is into insolvency. So should you as RV or RV consider the synergy valuation? If yes, then why? Anyone? Any thoughts?
May not be, sir.
Okay,
No, sir.
so
No,
maybe
sir.
you say
No, sir.
no. Okay.
No.
So principally, it could be all right to have a synergy value, but it is very difficult to really quantify that.
Point. So it depends on, if I understand, Devashiji, you're saying that depends on the situation, the information available, then only you can consider it.
Absolutely, absolutely.
Correct. See, one quick background is this is a case for Videocon Industries. There are 13 different entities, and Videocon, as we know, they are into multiple lines of businesses, the real estate, telecom. I think there are the other more all business also they are into there. So eventually what happened is somewhere in 2018-19, all these companies within Videocon, they went into insolvency. There was a specific RVE appointed to actually do the valuation for each and every entity separately. Number one. Then as the case progressed, I think the way things went on is that they saw there is more value if you combine all the entities together and look at from a group perspective. Maybe there could be somebody who's interested either to buy one company. There could be somebody who would be interested to buy a particular line of business, which will have more than one company, or somebody might be keen to take over the entire company also, the group, I mean to say. So these kind of things happen. And eventually what happened is they said that now let's look at from a group insolvency perspective. Now then they said that, okay, RVE can continue and they should provide a valuation at a consolidated level, right? This is where the group insolvency, can I request if you're not speaking, you can put your line on mute. Omveer sir. Omveer ji. Omveer ji. Okay, let me see if I can put him on mute. Yeah, I can. Okay. So what happened is eventually when these different companies would combine, so there is a possibility there would be a synergy value. There could be a backward integration, there could be a forward integration. And obviously this is one of its case. So this particular RV was in a way in a situation where they were handling for the first time this kind of a case. So it could have led to a benchmark for the future situations wherever there is a group insolvency case. So let's see what are the contraventions, and we will answer this second question also, whether the RV or RV should consider or not the synergy valuation. So first, let's look at the contravention. So contravention, basically, this is as per the disciplinary committee. Whenever the investigation was taken, this is what they found. They said that the summation of the valuation of individual companies, which was undertaken at the earlier date, has been done. So basically, they have not reconsidered the valuation of the group entities as together. It is a simple summation, 1 plus 1 plus 1 plus 1, not 2 plus 2 is equal to 5. So that is what one of the contravention is. Second is synergy valuation is not provided for the CD while submitting the fair value and the liquidation value. So we all know that whenever a company is into CRP, we have to provide the fair value and the liquidation value. But this specific synergy valuation was not provided. So what exactly the RV had to say? So RV said that we also requested to provide the fair value, liquidation value per set segregated into the following business segments. So as I mentioned, 13 different entities. Now, when the RP said that, okay, you need to help me with the consolidated view, there was one more view which they wanted by different business segments. So consumer electronics and home appliances, telecommunications, oil and gas. So, which means you can imagine the valuation, 13 different companies, one view. Second view, business segments, 4 different business segments. And the third view would be the consolidated view. So here the RV is saying that we have to provide the business segment view also, number 1. Now, previously, the RPs for individual companies, they had appointed this RP, so they had to carry on for these 13 entities as for the entire Videocon group. So the point here, what RVE is saying is that they were appointed by all the RPs for these 13 different entities. And some of the businesses during the valuation where they were doing the individual company valuation, that time they saw that the operations for business segments like consumer electronics, home appliances, they were actually suspended, majorly suspended. There was nothing much which was happening. The plants were not at all active, and there were a lot of operating losses which were incurred in the recent past. So obviously things were not moving on. It was like not a going concern. Telecommunication business also, the entire was shut down. I remember in this case situation, Airtel, Jio, they had a big boom, and obviously Videocon was not able to sustain. I am sure we all know about what is happening with Vodafone Idea also. So in those kind of situations, obviously you will not have much capital to outlay and then continue with the business because of the tough competition at that point of time, even in fact today also. So in that way, telecommunication business also had shut down in all the circles. Also, whenever the visit happened, so what happened is that most of the cases, whatever components, plant, machinery, factory, whatever they had, everything was dismantled and everything was kept in the warehouses. So as per the RVE, there was nothing material to highlight, or they can say that once all these 13 companies are combined, or maybe they are combined as a business segment, there will be anything as a synergy value. So this is what the opinion was about the RVE. Now let's see what the IBBI has to say. So the finding was that eventually only the accounting adjustments were made while submitting the consolidated valuation report. So basically, as per the accounting, or maybe let's say whatever the individual 13 reports as a valuation had. So what they did is they just added that and they provided as a consolidated view. So it was more like a summation accounting adjustment with certain adjustments, corrections here and there. But eventually it was not providing any specific synergy value, like anything which will go beyond the valuation, which is there for all the 13 companies together. Then also it says that as per clause 6, as per the model code of conduct, right? It says that at any time, or in fact, at all the times, high standard of services, exercise of due diligence, ensure proper care and exercise independent professional judgment. Now here, what is happening is the committee is highlighting this specific clause, that was there any specific due diligence carried out by the RVE, right? If they have to put up into independent professional judgment that there is no synergy valuation, what is the due diligence they had to see? Usually what happens is, in my view, these due diligence would be carried out, definitely, but somewhere they don't get reflect in the reports. Usually whenever these kind of disciplinary cases would happen, that time the communication with the committee, you might be able to show your working papers, Excel calculations and all that, this is how you did. But very important part over here is that these all things should get reflected in the valuation report in the first place itself. So that is where the RVE and RV should be very, very cautious. Another view of the committee was that RVE got an opportunity to set standards for dealing with group insolvency case. So as I mentioned in the beginning, that it was one of its kind. Obviously, this was an opportunity for the RVE, as per the committee, that they could have set some standards, that in case of group insolvency cases, what exactly they could have done, maybe how to arrive at a synergy valuation, like how to take care of the valuation at a total level, consolidated level, whenever there is a group insolvency cases. So basically, the view of the committee was that this could have become a case study. But eventually, based on whatever the output was in the valuation report, that doesn't seem so. So in this case, the final, I would say the final order or the final finding of what committee said is that the aggregation approach and simply summing up the results of individual assets without discounting the possibility of synergy in treating the asset of CD as a group is an error on the part of professional judgment. So there is a professional judgment, but maybe I think this professional judgment has not been justified basis on whatever information I could gather. It has not been justified. It has not been reflected correctly in the valuation report. So this is where this was the final outcome of the first contravention. We'll see other few contraventions also. And then if there are any specific questions, I'll be very happy to take it. So let's look at the second one. Number 2. Now here what it says is there are certain aspects. So before I dive into this, I wanted to ask all of you, can an RV or RVE without visiting the site, or maybe he or she had visited the site somewhere in the previous assignment or last year, not during this specific valuation, can we consider that site visit, and based on that, we can perform the valuations? Any thoughts?
I think that will be erroneous. That will be erroneous. The site visit is important, and a contemporary site visit is also important, because it has to be somewhere in sync with the valuation date and the valuation exercise being carried out. A visit done sometime back may not be reflective of what is the current situation. So
exactly.
I think that's not right.
Absolutely right, sir. Anybody else want to add what?
Sir, but as a SFA valuer, how we will do the site visit, because that is need to be done by the plant and machinery valuer or the land and building valuer, because we are the financial assets. We have to deal with the financial assets now. So like that will not come in our purview. We can only rely on the reports of the land and building valuer or the plant and machinery valuer. We can access the books of accounts in case of the liquidation, so that we can check the debtors value and all. So like as an RVE, if we have all the kind of plant and machinery, land and building, and SFA value, then it is possible. But as an individual RV, we are doing how it can be, how this can fit in our purview if we are doing the valuation of an say IP assignment.
Sanketji, small correction here. See, as a SFA RV, obviously you need not require the site visit. That is, I think, very straightforward. It will be mainly required for the plant and machinery and land and building. But yes, in case if there is an inventory valuation to be done by the SFA asset class RV, then yes, then you should be doing the site visit. So
But
it
then,
depends.
Then it will be two assignments, like one is the physical inventory valuation, sorry,
No,
physical
no, no, no,
inspection, and then is the
no.
valuation. No,
No, no,
I'm
no.
saying that it will add the time of the RV, na? Because when you have to do the physical verification, you have to go to the plant site and all. So like then that will come, means two assignments will be there, na, in that case.
No, 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 Sanketji. There is some kind of a fundamental confusion here. If you are an RVE and if you have to do the valuation of inventory, assume you are a SFA RV.
Yeah.
So you have to visit the the site or the warehouse wherever the inventory is lying, and that is part of one assignment. It is not a separate assignment. So I think maybe I would request if you can just go back and check that as an RV and also as per IBC 2016, it has very specifically mentioned that wherever there is any kind of a valuation, which is obviously if it has a physical asset in place, the site visit is mandatory. It is not an option. So again, repeating
But
myself,
practically, is the SFA valuer going based on the remuneration? I mean, I'm just only asking a simple question based on the remuneration they receive, or the based on the assignment limitation. Are practically are we going to check the inventories and all? I mean,
Sanketji, a small correction again here. Whenever you are taking an assignment, the first thing when you give the engagement letter to your appointee, in this case it will be your appointment done by the RP or the liquidator in case of CRP or liquidation. So the first thing you will check is whether there is a physical site visit required or not required. That will be based on the information shared by the liquidator or the RP. So he will provide the information whether there is inventory. Second, you will check whether who is going to do the inventory valuation. Is it going to be the land and building, P&M or SFA? That also depends on the class of inventory. And then you will decide whether the physical visit is required or not required. A lot of cases, there are situations when they would say there is a plant, right? But there is no inventory. So you will take a confirmation from the RP that there is no inventory, which will corroborate with the balance sheet information also. Maybe the balance sheet is of 2015. Inventory shows, for example, 5 crores. We are sitting in 2023. As of now, there has to be no inventory. So you can safely assume based on the written information given by the RP or liquidator. I hope that helps.
sir, one last question is there that suppose if I have been appointed by an IB, okay, and see there are certain kind of stocks which contain the raw material or various sheets are there. Stock can be of anything. So like as a CA or as a finance person, I don't think so that we are that much expert. Instead of books that we can actually assess the real value of that material which is lying in the go down or the warehouse. So, like in that case, I think so. Uh, the assistance of the technical expert is also required for evaluating the same. So, like that need to be discussed with the IP for before taking the assignment or not.
Absolutely. Absolutely. You have to be very, very sure what exactly is part of the inventory, because inventory could be a raw material, WIP, finished goods. Okay. You might not have expertise to look at all the types of this. You would need a technical expert. In some cases, could be an engineer also. Depends on what exactly is the type of inventory.
So, like
But
the valuation which is going on as an IP for an IP cases, like it's not that much simple, which is looking apparently.
Sorry, I couldn't follow your question.
I'm saying that the valuation assignments given by the IP for the big companies are not that much easy as we look apparently on an outskirt basis.
See, that is where the professional judgment comes in place. That is where the professional judgment comes in place, Sanketji. So you have to sit and discuss with the IP, the liquidator, understand what exactly would be your role. You have to look at the documents, the balance sheet, right? You'll have to do some kind of research also, what exactly the CD was into, and then take a call. Obviously, these all discussion will happen before you are appointed. You understand before you share the engagement letter. And this engagement letter will have all the details in terms of whether you will be visiting the site based on the information given by the liquidator. I hope that helps.
Yes, sir. And sir, if I give the appointment letter to any IP and later on I withdraw the assignment, I don't think so there will be any risk from the IBBI side.
You cannot give letter to the IP. IP will be appointing you.
No, IP will be giving the letter. We have given the confirmation to IP. And after giving the confirmation, if I withdraw from that assignment and if I not deliver the assignment, I don't think so there will be any risk from the IBBI side because we have only just accepted the assignment and not executed the same.
I have a different view here, and this is my personal view. Of course, this has to be discussed and agreed from IBBI also in such cases. There are situations when RVE is not able to perform any assignment, number one. Okay, there could be personal or professional reasons. And if you are withdrawing from an assignment, so obviously this will impact the IP. You see, I'm an IP also, so I understand that perspective. So eventually, if I had assigned you and I had appointed you for an assignment, and at a last minute, if you withdraw without any consent, without any reason, without a mutual discussion, I might not appreciate that as a professional. And maybe depending on how we communicate with each other, I might approach IBBI. So in these situations, what I would suggest, you should take a very cautious call, have a mutual discussion with the IP or the appointee, and then decide if you want to. If there are any difference of opinions, you can discuss, decide. In this case, I would, if I'm in your place, what I will do is, rather than withdrawing from my assignment, I'll try to see, because I'm part of the RV community, I'll see if I can request one of my other RV friends, if they are ready to take the assignment or somebody can. So I'll help the IP to replace me with another RV. This way he will be very, I think, satisfied that, okay, at least if A is not doing it, I have B as a replacement who will take care of my assignment. This looks more professional in my view.
I think that there is another angle to it. As an IP, I think it is obligatory that we have to file. I'm also an IP, so we have to file progress report to NCLT. So when we file the progress report, we also mention that, okay, valuers have been engaged. So that is a part of the progress. Now, if a valuer suddenly resigns, again, this has to be again intimated to NCLT, which is not a very comfortable.
It's cumbersome.
Thing.
Yeah, it's very cumbersome.
And it goes adverse.
Yes.
Got it, sir. Got it. Actually, practically, like when I speak to you, then definitely my knowledge enhances. So I love to, throw the questions to you. Thank you.
Yeah, no worries. My pleasure. Even I'm learning with all these things. Thank you so much.
Yeah, thank you, sir.
Okay, so I think this we have answered that yes, site visits are imperative. We have to do it during the assignment. We cannot, based on our previous assignment or previous site visit, we can continue with this, right? Okay, now another question.
Sir, one small, so sorry for
please go ahead.
This site visit, many places, there is a request that, okay, you do a virtual site visit. You don't have to physically be there, do a virtual site visit. What are your thoughts on such kind of virtual visits? Does it satisfy the requirement?
Sir, I will have one word answer for this. No. Please don't do virtual site visit. Please do physical site visit, because the law is very, very clear. And the first thing we have to do is we have to abide by the law.
That's true.
There could be some situations if you want to delay the site visit, if you want to send your associate to the site visit, make sure you have enough documentation. Nowadays, I've seen people taking selfies, right? There is a videography which is getting done. Those all
Correct.
things are very important because this is a very important part of your valuation exercise if there is a site visit required. So physical is imperative.
Fine.
Yeah. So any answers for the second question? This is slightly tricky. I know we might have different views here, but still I will take the chance to ask that can we completely as RVs rely on information provided by the RP or the CD management of the CD? Any thoughts?
So I think my thoughts are if the similar data is available on any public platform, then I think there is a need to review, because basically as a part of valuation exercise, the task is to do a due diligence as well.
Absolutely.
So as a due diligence, every data, whatever is given, cannot be simply accepted at face value.
Correct. So taking everything at the face value or what? Yeah, Gauravji. Yeah, please go ahead.
Yeah, good noon to everyone. Yeah, in this case, I would like to comment upon that, sir. The reply to second question falls in the should category. So we should not completely rely on the information provided by the RP or management. So there should always be a due diligence independently to be done by the RP.
Correct.
So there is not a clear answer, but it should fall under the should category. So there must thing and a mix of all.
Yes, absolutely right. Yes, absolutely right, sir. I will just twist this question now. Let's see what are the different views. Let's say the RP, let's say the company is under liquidation, not operational. I know some cases in insolvency where the promoters are actually right now fugitive. So there are some 60, 70 police cases going against those promoters. They are not to be found. They maybe have left the country. The audit happened in 2015. MCA identified this company as a defunct, and they have already striked off the name from the registrar of companies. In such situations where the RP himself is not able to give you the information and it is not available publicly, what will you do?
We will take away from that assignment. So we can't able to give the comment, because this happened to me practically in one assignment. Like there was a case of a bank in which the owners has run away, and banker and the RP was saying that you should give a report that they have done the fraud, and they don't have any kind of that, they have only the credit slip. So I told them that without having any investigation, without having any documentation, how can I say that you have done the fraud, the company has done the fraud? So it's better to, because they use the RV's document as an evidence in the court to save their seats, okay, to save their positions. As a banker, I'm saying, as an banker or the other persons are saying. So like as an RV, like this kind of assignment wherein you are not having any kind of data, how you can able to comment that? Or either you can only limit that, okay, the data is not available, so I'm unable to find, unable to give any information, just like that kind of, you know. But we can't say that, okay, the company has done fraud or any suspicious thing is there, suspicious entries are there, because that is lack of the data. For my view.
Okay. Point.
Sorry, my view would be, I will value the assignment based on the values available here, and with the rider, what is the condition, and that thing will be clearly part of my report, that this is the reason and this is the value I am getting out of the data available.
Fair point. Fair point. Great. Anybody else? So I got two very different, interesting views from Sanket ji and Himanshu ji. Any other views? Yeah, so I think broadly, mostly people will fall in. Yeah, sorry, somebody trying to say something? Hello?
Yeah, I'm saying.
Yeah, Nika ji. Yeah, go ahead.
And I have one case of valuation in which balance sheet is provided, but a copy of FAR is not being provided by RP. RP says that the CD is not cooperating and he's not supplying any information. He's a big plant at Ludhiana. And plant is in very good condition, but only balance sheet and detail of assets is provided to us, whereas copy of FAR from where I can see the valuation means value of assets is not being provided so far, and RP is trying hard to get all that information. So such cases are there. You followed me?
Correct. Yeah, actually, there is some disturbance from your side. I don't know if there is an issue with the line or what, but though I was able to manage to understand what you're trying to say, Nikaji, I think fair point. Now, there could be different situations where you have taken up the assignment, if you have not taken up the assignment. Yeah, Nikaji. Hello? Hello? I hope, am I audible?
Yes, sir. You are audible, sir.
Okay. Yeah, Nikaji, I think there is some disturbance from your side. I know it's only for me or others, but I got your point. So what I was trying to say is that, yes, situations could vary. If you have not taken up the assignment and if you know there is no information available, then I'll go with Sanketji's view that I might reject the assignment before accepting it. Important point. Another thing is Himanshu ji, as he rightly said.
No, sir. But now are you hearing me
Nikaji,
now?
so sorry, your voice is
I have
not clear. Hello.
I have accepted that assignment, and also I have made the visit to the factory also, and all those assets, they are intact, they are in good condition. But
Okay.
problem is only this, that value as per FAR, as they are capitalized, is not available.
Understood. The fixed asset register is basically what you have not received, and the value as per that is not okay.
Not
Okay.
provided. Okay. No, value is not there. Value, I am not able to see. There is no value, unless detail of assets.
So in that case, you have to very specifically put it in your report that what was the value as per FAR, which you're saying it is 0, but what is the valuation as per your independent assessment, right? Depending on if you have done the site visit. So if it is a machinery, obviously you will try to gather some information about the machinery.
From internet and
Exactly.
can gather that information.
That professional judgment, you'll have to use it and then accordingly provide the value. But very important part here is that you should ensure that your valuation report states that very clearly, that when you requested for the FAR, though the FAR was given or not given, if it was given, it had no value, then how did you use your professional judgment? What is the methodology you adopted? What is the specific information sources from where you gathered details, and then you have done the valuation? That is very, very important. So I'm just looking at the chat. I think there were some questions. Rahulji was saying normally data collected during a different time period should not. Yes, you're right. Mrinalji is asking who is to do valuation of the inventory by SFA or P&M. I think Mrinalji, I already answered this question. It depends on the type of asset. So in case if it is not clear, you can just ask me again. A judgmental call to be taken based on the best available information. Yes, absolutely. Yes. So let's move on. I think it's a good discussion, but we'll have a lot to cover. So I'll be slightly fast here. So here, if you see, the contravention said that it has been observed that the following assumption, limitation, disclamation elucidated by the RVE's valuation report are in violation. Okay. Now, what exactly is the disclosure? Now, this is part of the RVE report. It says RVE has not conducted any site visit for this exercise. The report is based on data collected during the site visit carried on 2017-18, previous engagement. This has been mentioned in the report. One. Second, it says RVE has relied on information provided by the RP or management of the companies, considering that the same is materially accurate and complete, and it forms a reliable basis for the valuation. See, I think this is slightly tricky. So you can't say that based on the previous 2017-18 sitting in 2019, doing without site visit, you're saying that this is the disclaimer part of your report, I don't think this will hold good. And you cannot completely rely on the RP or management information, assuming that it is accurate and complete. As we discussed, there has to be some due diligence from the RVE also. So again, another contravention, it was a significant passage of time between two visits. Obviously, the previous visit was in 2017-18. Now sitting in 19 or 20, things would have definitely changed. Actual availability of the plant and machinery on the site and their conditions cannot be ascertained without a physical site visit. I think it's very clearly stated, and we all agree to this also. Assumption that there is no change in fixed asset is unreasonable. Obviously, if you have visited 1 year, 2 years ago, even if it's 6 to 8 months, I would still suggest that you should do the site visit if it is a different assignment. And rather than assuming that there will not be any change in the fixed assets. Physical visit was part of the required due diligence for valuation. Yes, it's part of the valuation rules also. So what did the RVE say? It says it was appointed to carry out valuation of 13 entities on a standalone basis. So RVE only did the 13 different valuation before the group insolvency was concluded. So which means they were part of both the situations where they were doing the valuation for individual entities and on a consolidated basis also. One. Second, they are saying that there was most of the entities were not operational at the time of site visit when they did the individual assignments, basically the individual valuation. And RP had sought from them a new timeline and most incremental fee quoted to carry out fair value and liquidation value on a consolidated basis. So basically, once the Honorable Court said that we will look at this case as a group insolvency, obviously the valuation perspective would change and they would have rediscussed the overall appointment fees and all that to have a valuation at a consolidated level. So they are saying that this was a separate assignment, but linked to the previous assignment. Information in respect of certain assets which was not received from the earlier RPs to enable them to determine their value. So this is in a way to say that when we were doing the valuation of 13 entities, there were 13 RPs. Now consolidated, there is one RP. So we had not received information from the earlier RPs. So hence it was difficult to determine or eventually put them as part of the consolidated report. And they said they carried out the further due diligence, including market survey, to arrive and calculate a consolidated valuation of the fixed assets. So here the point was site visit, right? No physical visit, but here they're talking about a due diligence. And they were also given to understand the RP that there was no change in the fixed assets. Now see this. This is a very important point. RP says there is no change in fixed asset. As I said, we cannot completely rely on the RP's information. Of course, he's a professional. He will not mislead you, but still there has to be an independent judgment, and that will come through only the site visit. So maybe you might have done the visit 1 year ago, but as of now, that visit is very, very important. Based on that, you will take a call whether there is no change in the condition of the fixed assets or not. So what were the findings? So first finding was that if you see here, there was 16.2 lakh rupees, which was actually charged by the RVE, right, as out-of-pocket expenses. So the finding was that given the fee structure assigned or the scope work as reproduced above, not updating the records, visiting a few sites on selective basis is not benefit, or it's not right as a professional justification. So eventually, if you are charging such a huge amount or fees, it has to be justified. See, this is how IBB is looking into cases, which means you have to eventually corroborate your fees or your expenses charged as part of your valuation assignment. And I think it's part of the rules also that your fees should not be exorbitant. It should be in line with the work performed. So this is very, very important. Another thing, it says that I'm reading the blue highlighted part. It says that you cannot simply presume that the consolidated report on the CD means aggregation value of the reports. It is not the right approach, because eventually whoever is going to take the decision based on the valuation report, obviously this valuation report is going to be eventually used for the information memorandum. And later stages, there would be people who will be looking at these reports. So the consolidated view is just adding up without doing any site visit. It doesn't give us a right perspective. So hence, this also contravention RVE is not in the right footing. Not trying innovations in the methodology to demonstrates lack of due diligence. Obviously, where you think that whatever information provided by RP is accurate, or if you assume that the fixed asset conditions will be same. So in such situations, you have to see if there are any specific new methodologies you can innovate. So this is the expectation. RV has limiting its responsibility by stating that the report is based on the information data collected during the previous visit and not carried out independent inspection considered changing the value of assets with time. So again here, this definitely RVE seems to be on the wrong footing, that they have not done the proper due diligence site visit and the assumptions or information based on whatever been provided by the RP. So we have to be very, very cautious in such cases. Number 3, now what it says, before again, some questions. What is RV specifically supposed to disclose regarding the RV signing the report? Anyone? I'm sure a lot of you would be part of RVEs, right? Any specific disclosure required by the RV who will sign the valuation report on behalf of RVE? This is very, very interesting. And trust me, this was something new for me. I have some of my independent thoughts here, which I'll share during the presentation.
Name of the partner, actual name of the partner or the director who is signing the report?
Yeah, that is there. But there is something very specific.
I think it is regarding the shareholding or the partnership interests of that particular partner in the RVE. That disclosure
Absolutely.
is also important.
Correct. But Debashish sir, do you know where exactly the disclosure is required?
No, this is something I also read the whole IBBI order, but
Yeah.
I couldn't connect that where exactly this is required to be done.
Yes. And this is where I sympathize the RVE also, because as per the code of conduct or as per the valuation rules, as you rightly said, this is required where you have to mention whoever is signing the valuation report. In this case, it's a valuation report. So obviously they have to disclose their contribution or their overall capital contribution or a percentage. That is very important. But nowhere in the rules it is mentioned that it should be part of the valuation report. So this is where I think the challenge is, and this we discussed that the disclosure is required to be done in the valuation report. Now let's look at the specific.
Why we disclose our capital contribution in the report, which is to be given to the client?
It is not the amount, it is basically the percentage.
The percentage, right? Also, not because there is something personal between the partners or the directors of the RVE. Why the client should know about my percentage? Suppose if I am a 10% or 15% owner in any RV, then why I should disclose that 15% to the client, that I am this 15% owner in this RVE? I should disclose that what is my my interest or my contribution to that particular valuation report. That is fine. That okay, 50% I have done work, 50% work is done by another person. That is fine. But my percentage, why I should disclose that? That is not looking very logical. I'm just curious to know.
Yeah, it's a debatable point. I don't have the right answer for this, but I just have a viewpoint here that maybe, let's say if Sankeji, you, me and Debashish sir are part of the RVE, okay, for example, and let's say if I'm going to sign the report, for example, my holding is only 1%, right? And as per the law, if I'm required to mention, so imagine a report where it says that report signed by Prakash Kukreja as RV for SFA asset class on behalf of RV, shareholding percentage or contribution to 1%. It definitely gives one perspective that what is a kind of control or what is a kind of standing I have within the RV. Now, in this particular situation for this Videocon, RVEs, there were 6 RVs who signed the report, 6. Okay. Now, obviously, I don't know the entire composition of this RVE, but when 6 people are signing, okay, it's very important to know that what is the overall control which these people, based on their contribution capital, they have within the RV. So this is a
that
requirement.
need to be given to the disciplinary committee when the proceeding is going on, but not
No,
on the
no, no,
valuation
no, no,
report.
no, no. Yeah, that is, see, that is where Devashi sir and me were discussing in the beginning that the clarity is not there. Where exactly the disclosure is required. In fact,
Sir,
I'll
but in
just
our
give
case,
me.
in our case, suppose for example, you are
Hmm,
holding 1% equity, for example, in
hmm,
our RV, but you have completely done the assignment, even though I am holding 51% or 60%, but I don't know what the assignment is there, what is going on,
hmm, hmm.
anything. So then also the entire owners and everything is to be lied on you because you have executed the assignment. Only I
Hmm,
am
hmm, hmm.
holding the major stake, like that is not a part that I should be liable, or the deputy self should be liable. So like that need to be disclosed, like that need to be
Yeah,
disclosed
your
presently.
views are understood, Sanket ji. Allow me 2 minutes. When I show the presentation, I
Sure.
think that will be more clear to you. But yes, I also agree to you that this is slightly debatable. It's not very clear as per the code also. So yes, this can be argued endlessly, if I think. And that is where I sympathize with the RV also. So it says that RV valuation report does not provide the contribution of partners of RVE who has signed the valuation report. Okay. Now, what did the RV say? Very specifically, that it does not specify that the capital employed contributors should be disclosed in the valuation report. And they are right. It doesn't specify. It is accepted. It accepted that disclosure should be made to the CD, right? They had submitted all the relevant clauses disclosure in the engagement letter signed between the RP. So they are saying that whenever the engagement letter was discussed, signed, there was a specific clause 10.6. That clause had very clearly mentioned that what is the overall RV structure and also who are the partners who will be signing the report along with the stake they have in it in terms of percentage. Also, RV mentions that they are required to submit all these details to the RVO, IBBI, ROC, as the case may be. So obviously, these disclosures are already done, as I think Sanketji also highlighted. So in that case, the assumption was that they have already done the disclosure. There is no specific disclosure required in the valuation report. Okay. But the finding is that RV relies on the engagement letter, and the authority observed that the clause in the engagement reflects a general presumption and implies shifting the responsibility to the RP. Okay. Now see this. This is the clause. It says Rule 7I specifically provides that in case of partnership entity or company, the registered valuer, it shall disclose the company concerned the extent of capital employed or contributed in the partnership entity or the company by the partner or the director, as the case may be, who would sign and act in respect of the relevant valuation assignment for the company. Now, this part, the last sentence, who would sign and act in respect of the relevant valuation assignment, this gives a hint. Again, it's a hint that eventually this should be part of the valuation report, though it's not very clear. Why? Because it says who would sign. Now, if I take an example about what we discussed, like Sanket ji, Devashi sir, and myself, we are part of the one RVE, and let's say we are three different asset classes. If it is a financial asset valuation, obviously, let's say if I'm going to sign it, then if I sign it, then it will be signing on the valuation report, and I will be taking up the assignment on behalf of the RV. In that case, I think this is where it says that it should be sign and act in the respect of relevant valuation assignment for the company. So that is where I think this is construed as a valuation report. The report was signed by 6 partners, but there is no clarity from the report that the engagement letter about the capital employed or contributed by above said provisions. So this was the final finding, and they said that the RV has definitely violated these rules. So somewhere I think we have to be very careful whenever, in fact, whoever is part of RV, I think this is a very good learning for all of us. So we should be very, very careful that whenever we are signing the report as RV on behalf of RVE, we have to mention the extent of capital employed or contribution, depending if it is a partnership or a company.
But they are that
Rahul,
much, they are that much stringent towards the RV because that is a government office. not like a ICAI, ICSI or ICMI private, this NGO, oh, sorry, like Section 8 companies or the private institution. That's why I think so they are that much stringent because they are directly governed by the central government.
Okay, maybe. Sorry, I couldn't.
Like it's my own view because they are just taking that much of the harsh penalties and all because they are not, there is no layer between IBBI and the RV because IBBI is a government office and like they are directly, implementing all these laws. Like as we all are the member of the ICI or the ICSI, so like ICSI is run by the private, it's a private kind of institution run by the private people. But that IBBI office is run by the government officials. So that's why I think so that is the difference. Like the IAS officers and all, like they are running this institution.
Okay.
Because I think so that's why they are taking that much of stringent, these rules and regulations, and not having that much of the clarity because that's how the government department used to work in other cases also, like the tax department or the GST department.
Okay. Rahulji, I couldn't follow your question. Sublet of RV assignments. I'm not sure if I follow your question. Maybe you'll have to unmute yourself and tell me what exactly you mean. So I think
my question was that at times we also sublet the assignments, right? The RV is authorized to sublet the work, let's say, or to join hands with other associates or other valuers to in order to carry out an assignment. I mean, of course. In that scenario, who signs the report? I mean, if let's say I am given an assignment of valuation, and if I sublet it to another valuer, which I think I'm authorized to do so by way of proper disclosure. So, so if I sublet the work, and in that scenario, who is going to sign the report? And how about I mean, again, how do we answer this question of disclosing the partnership, the percentage holding in the RV? I mean,
No, Rahulji, I think as an RVs are entitled to engage other valuers.
yeah,
They can also do the valuation by their own directors or own partners who have to be registered valuers. But as an RVE, they are eligible to engage other valuers as well. So my thoughts are, if they engage another valuer for doing a specific assignment, it is appropriate that that valuer only signs the report. Of course, this disclosure 7/1 is an interesting thing, and that needs to be done. But then I think it is important that whoever is doing the valuation, he should sign, and RV can, if the RV can validly engage another valuer, then it is best that, okay, that valuer only signs the report.
So again, I was just going forward. I mean, if, of course, the valuer who has actually done the exercise should be the one signing the report. But how does, in light of this development, I mean, the need of disclosing the partnership of a particular valuer in the firm for which he's doing valuation. I mean, how does we satisfy this condition in this scenario when we have sublet the work?
Rahulji, two things. Yeah, two things. See, I'm not sure. Maybe you can enlighten me that we as RV can sublet our work. Associating with another valuer, fair enough. So you are taking in help from another valuer, which is fine, which will be part of your valuation report. You have to very specifically mention, but you would be signing that valuation report. You have taken assistance from another valuer. Subletting your work. So for example, if Prakash has got an assignment, he's asking Rahul to do an assignment. I have never seen that. Has anyone seen that? Subletting, I'm spell it out as subletting. Is that what is market practice? Anybody aware about it?
No, sir. No such kind of word is there. Subletting is not there.
No.
So Rahulji, subletting is not allowed. So
only the thing
please.
is that if you are not having time or if you are not having expertise of doing that work, so earlier said by you that you can ask your friend or ask some expert to assist you in getting the work done, or either you assign that assignment to that particular person in a complete manner, that person can take the assignment in full if the assignment is fine. That is how the people are doing.
I think that is is the correct position, I believe, because I think as a valuer I can summon the expertise of another valuer. I can take help
But you
of.
would be signing the report.
Yes,
He
yes.
will not
Yeah,
be
yeah,
signing
I think
the
that
report.
would be the position. I think
Correct, correct.
I should be the one taking onus of that valuation. Although
Exactly.
I might have taken, help of the expertise of a third party or my associate.
So you can take that, Rahulji.
Yeah, yeah.
You can
So
share
I would be the
your,
one signing that valuation report, not
sir,
So
you
that
can,
makes it.
you can take,
Yeah.
that makes
you
it
can
pretty
share
clear. I think.
your,
Yeah, yeah. I
you
think,
can share your fees, whatever the fees is there, you can share certain percentage of the fees to an expert, and then you can get the same expertise help, and then you can prepare the first report or the second report if you are not having the expertise in that.
I was
That's how
just
the
an
people are doing.
observation, because I have never engaged in an engagement like that. Just that came across my mind.
And just correcting Sanketji, I think that is maybe I might have not understood what you're saying. There is no first and second report. There is one report which is being done by Rahulji. He has taken assistance from another valuer, which is going to be part of his report. So there
No,
is
sir,
one
I'm not
report.
saying, first or second report. I'm saying that you engage another person on a certain percentage of profit sharing. Okay, based on his efforts, he will be
Huh?
putting out in, executing that particular report, and then that you can deliver that particular report, so that you can also learn. Like if I'm a new valuer, I can also learn how to draft the report and what are the key points, and as an expert that person will also get compensated. So that's how the practically the things are going on.
Okay, so Rahulji, I think it's very clear to you that once you are going to sign the report, obviously there is no concept about capital contribution because it is an individual. Am I correct?
Yeah, I think that's
Clear?
pretty clear. Yeah, I think yes.
Okay.
I don't think there is any iota of doubt. I believe the valuer who has been given who is primarily responsible for the assignment has to be the one taking all the responsibility of its faults and
Good point. Good point. But one word of caution here: if you are actually appointing another valuer, you have to mention in your valuation report. But if there is any fault or if there is any issue with the valuation done by this expert, the liability can be distributed between you and him. But you have to mention that in your report, that whatever information he has given you as a valuer, right, you are relying in as a professional. One. Second is, if there is any issue with his report, that is not going to be your liability. Valuation Rules 2017 makes it very, very clear. But the important point here is that it should be part of your valuation report. Then you are free from the liability if there's any issue with the other valuation. I hope that helps you.
Yeah. So I mean that's a good point, I believe. I mean,
Yes. You should be very, very cautious whenever using any support from an expert, and it should be mentioned very clearly about the liability.
I mean, full disclosure is actually to the
Absolutely.
benefit of the valuer.
Absolutely. Yes. In fact, you should define the scope. You should define if you have appointed all his credentials, his registration number, everything, what exactly he would be doing. His report should be part of your report, and very specifically mention that his liability is his. It's not my liability for his work.
Thank you so much.
No problem. Okay, so quickly summarizing this RVE case, one is that we have to obviously provide the support or the valuation assignment with the highest standard of services, due diligence, proper care, and exercise professional judgment. Then in terms of whenever there is a RVE, the person who is signing will have to make a disclosure about the capital employed or the contribution, right? Whoever is signing it. And the third would be that in case of CLDs, it has to be very, very importantly mentioned in the valuation report. Now, with that, we will move to the second case. So this is the second for an individual RV. He was a SFA. Can I request, if you are not talking, you can just put your line on mute, Sadbi sir. Thank you. Okay. So now, though this is for an SFA asset class, but I see that there is a lot of learning for other asset classes also, plant and machinery, land and building. And in this case, the RV was actually given a warning that they have to be very cautious and transparent whenever they are conducting valuation. Also, that transparency should get reflected in the report. Very, very important. So let's look at each of the contraventions. So first it says that no justification for estimate of fair value and liquidation value of rupees 2.49 crores. And these were the deposits which were part of the long-term loans and advances. So in the balance sheet, there is a heading called long-term loans and advances, which has a certain amount. And the RV provided the value of 2.49 crores in the report. But there is no justification given by the RV. How did he or she arrive at this amount? So the explanation was not provided. What did RV say? The RV said that this amount, see, there is, I'll not get because limited time. So I'll just give a very brief perspective. There was a company in Singapore where there were certain advances which were given to them. And the recovery was already in process. There were certain legal proceedings which are already going on. But the recovery was not very sure what exactly would be the recovery, what would be the percentage. So in this case, what RV did is he or she arrived at a discounting rate as a 8%, right? And the total book value was 31.29 crores. So simply multiplying that by 8% is 2.49 crores. That was considered as a fair value and the liquidation value. So this is how the RV put it in the report. But I think it's very obviously that whatever approach you follow, whenever you arrive at the fair value, liquidation value, you should provide that justification. You should provide how exactly you arrived at the percentage, on what basis, what was the source. So these all were not considered as part of the report, and hence there is a violation. Now, second contravention, it says that appears to be a strong probability that the valuation of inventories has been missed in the valuation, leading to undervaluation of asset. This is very interesting. Now, this was again a liquidation case, and eventually what happened is that there was assets which were part of the plant and machinery. So if I'm not wrong, this was a steel company which was manufacturing iron and ore, and they had certain specific plants which were supposed to be valued by the plant and machinery. So there is no specific discussion which has happened between the RV and the liquidator. And this is where the disconnect happened. So valuation of inventories was in none of the reports. Now see what the RV has to say. The RV says that the liquidator informed that inventories of tangible ores, which has been specifically covered by plant and machinery value. Now this is what liquidator has informed, but there's nothing in written. Okay. Now, what exactly they found after the discussion, that these all were verbal communication between the RV and the liquidator. There is no proof that RV ensured that I am not responsible for the inventory valuation. It was the plant and machinery valuer, and this is the communication I had with the liquidator. So it is very clear that this will be out of my scope. So please remember that. I think Mindarji was asking this question. I'll just repeat myself, that wherever there is a situation that the inventory valuation cannot be done by land and building or plant and machinery, by default, it will fall under the SFA asset class. And the definition of asset class for plant and machinery and land and building, I think is very, very clear. Land and building more like a fixed assets, which is obviously tangible, which is immovable. Plant and machinery could be obviously a tangible asset, which could be movable, depends. And obviously, whatever doesn't fall in these categories will be part of your SFA asset class. So I hope that helps. Anybody, any idea who will do the valuation of paintings and artifacts? Anyone?
Land and SFA valuer, but that expert need to be appointed.
Correct.
Right.
Absolutely right. It will be most probably done by SFA with the help from an expert.
Sir, how to value like there was one case which has come to me, and in that the painting was of the heritage, that was a very old painting and all. I think so that case we have discussed also. How to do that kind of valuations? Because those are
We have
very
already
subjective.
discussed it.
I think so offline. I don't think so. I have discussed with 1 or 2%. Like that is a painting of one Raja Maharaja, Raja Ravi Verma.
See, in case of painting and artifacts, as we just discussed, that it should be done through an expert, because none of the asset class valuers, they are technically sound enough to actually do a valuation of any artifacts or painting, number one. Second, the painter would have certain methodology. Sorry, the valuer who is doing the valuation for the paintings. So this would be based on who is the artist. The more the renowned the artist would be, the value would be obviously higher. There are certain ways that they look at that if the last painting for that particular artist, when it was sold, at what value it was sold, that helps you get some kind of a market value. Second is the condition of the painting. So if the painting is 10, 15 years old, there will be some wear and tear. Is it possible to restore it? If it is not possible, then obviously the value would come down. If it is a restore, there will be some cost involved. And then after that, what could be the possible value? So that aspect would be taken into account. Third would be the size. Now, obviously, in case of size, the smaller paintings will have small, because usually in case of paintings, what happens is the valuation is done by per square feet. If today Prakash Kukreja is a 5-year-old artist, my valuation per square foot would be, for example, 5,000. And let's say maybe Rahulji is another famous painter, okay, and he's been painting for last 20 years. The valuation of his painting would be around 20 to 25,000 per square feet. So it all depends on these different aspects, and then they will do the value. And obviously, physical site visit or physical visit looking at the painting is very, very important. I hope that helps, Sanketji.
Yes, sir. Got it, sir.
Okay.
So regarding agricultural valuation, what is the procedure? Because
agriculture,
it is covered under land and building.
No, sir. 1 second. When you say agriculture, what do you mean by agriculture? Is it the crops?
It is farmland, sir.
It's a land, right?
Right. It's open land.
So that
open
will be land and
agricultural
building.
land.
Yeah, that will be land and building only.
Okay, sir. Okay, thank you.
Yeah. Okay, so let's look at another contravention. Here it says that there was lack of convergence between the assumptions and the actual calculation estimated for trade receivables. See, this is slightly tricky area for trade receivables, and I would suggest all the SFAs RVs to be very, very careful. Please do your due diligence. Please ask the information from the liquidator or the RP, whatever communication, please ensure that you have all the working papers, and whatever basis you arrive at the FE or LV, make sure that you make it very, very clear in the valuation report. Okay. So in this case, what happened is whatever valuation was done by the RV for trade receivables, there were certain assumptions. Those assumptions were not very clear. Well, let me put some perspective over there. What happened is there were different receivables. So receivable, just for the others who are part of land and building and plant and machinery, whenever we sell to a customer on credit, it becomes a trade receivable, basically the money which is going to come in. Now, these receivables for a company which is under liquidation, they would be pending for a long, long time. So whenever RV has to do this kind of a valuation for receivables, first thing what they do is they look at the aging. Now, the meaning of aging is that you categorize how old the receivables are. It could be last 6 months, pending for more than 1 year, pending for more than 2 years, 3 years, 4 years. So you create that aging. Now, this aging is usually supported by the insolvency professional. And based on that aging, then you decide that, okay, let's see what is the communication currently happening between the IP liquidator and the customer who's going to pay the money. If there is any communication, if the customer is denying, if there is a dispute, based on that, this will give you some idea about what could be the fair value, or if there is a legal litigation going on, what is the status of that litigation. In this case, you can take an opinion from a lawyer also, that this is how the case is. What is the probability that the CD will win this case? And eventually there will be some realization. If the probability is 50%, obviously your fair value will be accordingly adjusted. So there are different ways to do it. But this is slightly tricky area, and this is where this RV was caught. So what she did is she categorized into 5 different categories, 15% to 2.5%. A means it's a very recent receivable. Obviously, the realization would be much higher. And as the aging moves on, the debt which is very, very old, the realization comes to very less as 2.5%. And they categorize this based on a further 2 subcategories within 2 years and more than 2 years. So this is how the categorization was done, right? But what was the finding? It says that all these detailed aging calculations were done in Excel. They were not shown in report. So I think though the RV had done a good work, but somewhere he or she missed it as part of the report. So had it been part of the report, the questions would have been less. Second thing, whatever calculation methodology was done, whether how you have categorized 2 years, more than 2 years, though RV was able to present this in an Excel format in front of the committee, but it should have been part of the report. So how you did the calculation? Why 2.5%, right? Why 15%? Those two things should be very clearly mentioned. So again, it says that your valuation report should be as specific as possible. With everything what you have done, you should try to ensure that your valuation report gets covered with that.
Sir, is there any court case in writing of the bad debts in case of the trade receivables? Supreme Court case is there, like someone told me, even though I don't find that if there are trade receivables, okay, and which are not recoverable, and you are writing of that as a bad debt. So is there any Supreme Court case on the same? Right?
I'm not aware, Sankeetji. I'm not aware about that. Satiji has a different viewpoint. He says,
but in trade receivables, it should not be the case now that we should send the confirmation letter to trade receivables. Suppose for example,
why will you send it? Why will you send it? It's
that
a
RP will send, na? RP will send, na? And if the trade receivables, trade debtor, the debtor is not responding back to the RP, then it is considered as bad debt. Suppose if there are normal, receivables listed there, and the trade debtor is not responding back after 2 times, 3 times, 4 times, 5 times, not picking up the calls, not giving any kind of answers. So either that kind of debtor is to be treated as a bad debt, 100% bad debt, and the debtor is say 3 or 5 years or 6 years old debtor.
Correct. In that case, that is how you can approach it, provided you have all the documents in place, right? And on painting and artifacts, I think Satiji has a different view that it should be done by the land and building. Satiji, you may be right. I don't say that, but as a market practice, this might be this one for SFA. But in this case, if it is a tangible, if it is an asset which is immovable, like you're saying Tussauds Wax Museum, right? So that Tussauds Wax Museum assets will be a building, correct? Maharaja's bronze statue, I think that is a movable property. I don't know how to be part of land and building. So, but whoever does it, let's say if it is land and building, SFA or plant and machinery, in that case, you have to justify one is who is doing it. Second, any asset class would need an expert over here. So I think the approach, the person who is doing it might be different, but the approach largely will be on the same lines. I hope that helps. So let's quickly look at the second one. This is also very interesting. This is the another RV from SFA asset class. And sadly, this person actually got an order that his registration was suspended for 6 months. Now let's see what are different facts about. There are different 5 to 6 contraventions which were there in his case. I've covered few of them which are important and which eventually led to this kind of an order. So I'll quickly cover them. So here it says the first contravention. Now this is important. Valuation standards or valuation approach used to arrive at FE or LV was not mentioned in the report. I think this is very, very basic. So I don't have any much visibility to the exact report and all that, but I think this is slightly very basic. So this definitely has to be ensured. Another important thing, I have also seen some of the valuation reports. Very vaguely, we mentioned that valuation standards as per ICAI or international valuation standards were actually referred to, or based on those so-and-so valuation standards, the assignment was done. But please ensure that you mention which valuation standard. Just mentioning valuation standards will not help. You have to very specifically mention which valuation standard, and you have to abide by that also. Now, let's see what were the views from RVE. So RVE says the methodology and approach was clearly described, number one. Second, the nature of the security or the financial asset, there was no specific way to derive any inference from the standards. So basically, he is trying to say that the valuation standards would not have helped to actually maybe use those standards or infer or arrive, because this is based on current asset. Of course, we'll have to see more in detail to see whether how right or wrong he or she is. But yes, it's very important that he says that there was no way to use the valuation standard. Now, it says that the finding was no mention of any standards or method adopted valuation report is not acceptable. So obviously depends on what is the discussion would have happened between the committee and the RVE. And though the approach was highlighted in the report, but valuation standards becomes very, very important. And these standards also eventually help you to which approach you need to use it, depending on the type of asset. So in this case, it's very important that we should mention the valuation standard. So as I said earlier, please mention the specific valuation standard, not the word valuation standards. Next contravention, it says that again, trade receivables. So in this case, what RVE had done is they had broadly categorized all the trade receivables more than 2 years, which is again not very reasonable, because all the trade receivables cannot be more than 2 years. If some of them are more than 3 years, 4 years, 5 years, they should be accordingly categorized if you're doing an aging analysis. So that term is called a period of pendency. That is something which was missing in it. What did RVE say? So he said that the detailed breakup of the information has been very well mentioned, and the valuer is the value of each debt was individually assessed based on different factors, like what could be the aging, chances of recovery, communication. So in such cases, RVE thinks that whatever value they have given based on this information, it was fair. But I think the point here was that categorization of the receivables for more than 2 years. So this is again found as not correct. And that is what the final finding was, that the detailed aging analysis was not being mentioned in the valuation report. Trust me, all the cases you would see that the RVE would have done a good job, but somewhere they have missed to mention in the report. And this is where the issue happens. So I think RVE would be known by the work he does, and his work will get reflected in the valuation report. So more the specific, clear, detailed report, I think it will be better for the RVE. Criterion for assigning the fair value and the liquidation value could have been more explanatory for a better understanding of the valuation report. Again, the same point, valuation report. No explanation for the criteria for assigning a discounting factor to a particular advance. So there were particular advances within the trade receivables. So there was a discounting factor which was applied, but there was no explanation on what was the basis of that discounting factor. So again, it is an incomplete information. Let's look at contravention number 3. So in this case, there was a short-term loans and advances, right? And this was under the category of receivables. So receivable and short-term loans and advance are two different categories, obviously, where you have given a loan or advance, and receivable is where you have done a sale transaction. It is like a revenue which is accrued but to be received later. So there is a combination of two different headings into one. So short-term loans and advances are talking about receivables over here, and the amount is 13.97, so 14 crores. So which is not rational. Now, what did RVE say? So RVE says that the information was not available. So the liquidator provided the unaudited provisional balance sheet to the RVE, and he did not provide the breakup of 14 crores. So obviously that was the reason the RVE did not show the breakup of 13.97 crores and did not mention in the report also, number one. Second, these advances, so this company was more into manufacturing of iron and steel. So in this case, what happens is that you use coal, and there's a proper chemical process where you have to heat the coal, then you have to eliminate all the gases and all that. There is a proper chemical process. So in this case, whatever the advances actually were given to the customers, right? So that was going to be set off from this kind of a sale. So customer was going to give you the money, but there were certain advances. There was a set off. It was a dispute. Now this dispute obviously was shared by the RV during the discussion with the committee, but this was not reflected in the report. Again, the same point goes over here, the valuation report. So RV also says the value for each of the debtor was individually assessed on different factors. But final finding says that the report should highlight the fact that 14 crores are based on the unaudited provisional balance sheet. And non-disclosure jeopardizes the assessment, and disputed deductions are not actual advances. See, again, the same thing, the information provided in the report is not adequate. And that is what is causing the challenge. The next one, it says inventories. So now there was a certain set of inventories, which was coking coal and met coke. Again, it was into steel, manufacturing of steel and iron. So in this case, some inventory was identified as dead stock. And the RV valued the dead stock as 27.2 crores without giving any justification. So obviously, in the report, it is not very clear that if you're valuing your dead stock at 27 lakhs, so on what basis? That has to be very clear. Otherwise, it seems arbitrary. What did RV say? RV said that this is a salvage value. So the total value would be much higher. And this is the 5 to 6% of which is arrived at 27.2 lakhs. So there are certain conditions. What were those conditions? Now, obviously, in such cases, maybe the stock was lying for more than 5 years. There are certain climatic conditions. These are all natural resources. Because of climatic conditions, the natural resources tend to be changing their form, substance. Obviously, the value will also get impacted. So here, RV assume that there are certain conditions, and based on that, only salvage value would be realizable. And based on certain calculations that he assumed, 5 to 6% would be something which will be able to salvage. Also, very important, this is interesting. So there is a statement. It says, so for potential value assessment, we have given only salvage value. Now, this is a statement. Now read the next line. It says, has been mentioned in the report, which somehow got missed from being printed in the final report as a human error due to format change of the report. So obviously, RV would have the draft report, which might have this statement, and coincidentally, it could be a possibility that this statement got missed. But this is a very important statement, which says that the valuation of the dead stock was based on the salvage, and this was missed. So again, this is slightly tricky. So here it says RV is unaware about the actual quantity and there was no site visit. So RV did not make any site visit. Same situation what we saw in the RV also. So he should have made a site visit, understand what is the actual quantity of the stock, right? That would have given a better perspective. And if it is a very, depends who is the valuer over here. So based on the quantity, based on the conditions, maybe there might be requirement for an expert also in this case to see what exactly would be the salvage value. In one of these situations, I remember when I was helping a valuation, so we had to salvage the entire iron ore, or these were like iron rods. We actually called a couple of people who deal in the scrap, and they gave us a quotation. So that quotation, then we took an average of that quotation, that would be the salvage value for that particular stock. So that also is helpful. But I think in this case, there was no specific action which was done here. Presumption of material condition is also not acceptable. Obviously, you can say that if RV has not visited, so on what basis he arrived at those conditions? So this also obviously will be challenged. And report is totally silent about current condition based on the solely liquidity. So here again, another situation where the RV has solely relied upon the information provided by the liquidator. So independent due diligence seems to be missing here. Okay. Now, the last one, this says, now this is also very interesting. I think this is a good learning for all of us. So if you see, there is a statement in the valuation report. It says that the said fixed deposits might have been adjusted by the bank against their dues, the details of which are not available. Gives the impression that the RV has not gone through the bank statement. Fair. Cash in hand also has been assumed the liquidation value of 20%. Now imagine cash has been valued at 20%. Without much justification. This is very interesting. So let's see what RV has to say. So RV says, firstly, they were provided with unaudited provisional balance sheet as of 18th of Feb 2019, whereas the liquidation order was 19th Feb. So there is a difference of 1 day. And RV says this was clearly mentioned. One part. Second, the scope of work of RV does not say that they're going to do the audit. Obviously, whatever information they get from the balance sheet, they will rely on that information. So they will not do any kind of audit on that balance sheet. So this is very clearly defined the scope of work also. Next, RV has relied upon the data information provided by the corporate data or the liquidator through verbal and written communication. Please note, verbal communication will not be appreciated. Anything, even if you discuss verbally with the liquidator, please make sure to you drop an email. You can initiate and say, this is what we discussed. And just for the good order's sake, you are putting this as a part of the mail. So that's a very, very good practice. Next, what are the different points which RV said? Major amount under cash and cash equivalents are part of the FDs. So in the balance sheet, there was a heading called cash and cash equivalents. The majority of the amount was fixed deposits. Now, each fixed deposit was against a line of credit opened by the CD in the corporation bank. So usually what happens is in banks, I'm sure most of you know that whenever they have to actually take any kind of a letter of credit, so in that case, you have to have certain security in place. So these FDs were part of those securities. Now, here, RV assumed that the corporation bank would definitely adjust these FDs against its dues, and accordingly, nil amount is considered. So this is slightly tricky because you cannot assume. In this case, RV always has an opportunity to approach the bank via the liquidator, get a confirmation from the bank what exactly is outstanding, whether they will be adjusting the FD. So in case of line of credit, I'm sure there will be certain agreement between the corporate debtor and the bank. And that would very clearly state that whether the fixed deposit would be adjusted to what extent, by when. Those things should have been looked into rather than a simple assumption. Now, another situation, cash in hand, which was valued at 20%, the RV says that it was presumed that during the course of liquidation, this amount will be utilized in administrative or operational work by the liquidator. And this was discussed with the liquidator. So I think this is also another tricky situation. You can't presume this without a specific thing to mention that how did you arrive at that. RV submitted that the professional work, certain professional judgments are taken based on experience and knowledge. For each small thing, elaborative justification is not possible. So this is one way to justify from RV's viewpoint. And finally, the findings were RV did not check with the banks. I think that's what we discussed. So RV could have checked with the bank to understand the actual adjustment, right? Before assuming. Also, there is a moratorium period, as we know that during liquidation. So whether the banks was authorized to do that during the moratorium or before the moratorium. Assumption of adjustments of fixed, sorry, that is not FC, that is FD, my bad. So please apologies for the typo. Adjustments of the fixed deposit against the LC is arbitrary. So that is an assumption which is not corroborative with the clear documentation. It is unacceptable presumption that during the course of liquidation, cash in hand will be utilized. So again, bad presumption in this case. So in such situations also, RV is actually at fault, and hence there was an order against the RV. So with that, we complete all the three cases. If there are any questions, please let me know. We can quickly discuss before we take a short break and then move to the next topic. I hope this was helpful.
Yeah, this was very helpful, and it brought in some of the new perspectives.
But in this case, to avoid these kind of things, so can't it be there that when the RV submit the report, say half yearly report to the RVO, so RVO internally review those reports and find the shortcomings before submitting finally to the IBBI or something, someone like that, because that will reduce the professional risk, because in this professional risk is becoming higher day by day, because you never know that what point, like there is no specific format or the criteria. So like RVO should make a committee, specific committee, wherein all the reports should be vetted, mostly the critical ones, or the RV, which the RV says okay, this need to be vetted, so that there would be no up and down or some back and forth kind of things.
Sanketji, my view, slightly if I sound a little straightforward here, my apologies in advance. See, we can't, yeah, see, all these committees as part of the rules or the code of conduct, they all sit with IBBI. So IBBI is the regulatory authority. I think that is very, very clear.
Yes.
RVO is more of like, I would say it's more of a conduit, which is actually helping the IBBI to ensure that the overall administration is taken care of. RVO doesn't have the responsibility, but obviously whenever we do these peer review 6 monthly report submission, that all goes via RVOs. There is a peer review happens, there are findings. But having said that, I think we as professionals, we will have to take due care that we understand what is the expectation, right? I think these are very good learnings for us. We should understand what the code says, what are the expectations. In fact, I remember last year when there was a national conference for valuation, when this valuation rules overall, RV as a profession completed 5 years, there was a very specific mention about RVs following the ethical standards. So somewhere it made it very clear that now IBBI would be looking at very seriously the kind of approach, ethical standards we as RV or RVE is following. So somewhere this kind of a tightening is required. My suggestion would be rather than looking at RVOs or IBBI, we should look at ourselves and ensure that we, in our best of our endeavors, we should provide a professional report, approach, and everything. This is my view.
Correct. No, but that is fine. But most of the times, like there are many aspects in any kind of the approach which we use, which are not, practically you can't find the exact solutions of those things. Like the growth rate is there, the discounting rate is always the, challenging part. Like, see, there are many things which are practically when you go to the valuation, when you do the valuation in the ground level. So like there are no answers to the questions, and you can't find those things exactly in the books, in the articles, in the blogs, or something like that. So at that time, when you use your
Sanketji,
personal judgment.
Yeah, towards professional judgment. And Sanketji, that is where the next topic will help you to answer this question. That is called caveat limitations and disclosures. I think that will help you.
Yeah.
So we will cover your specific point over there also, wherever you see that you do not have specific information or how to approach that particular situation. Having said that, any last question, anyone? Okay, so shall we break for maybe like 5-7 minutes? Is that okay with everyone? So it's 12:39. We can again reconvene at 12:45 and start with the next topic, which will be the CLDs. I hope that's okay with everyone. Okay, thanks everyone. See you at 12:45, next 5 minutes.
You'll never know. The Lucas relationship with Australians is always very special.
My apologies, I got really late. I hope we are good to start. Let me share my screen. I hope I'm audible.
Yeah, absolutely, absolutely.
Thank you. I think this combination of these two topics is very interesting because first we saw that where these disciplinary committees have actually given stringent orders against the RVE and RVEs. Now, this is where this topic will actually help us how RV or RVs can protect themselves, right? Wherever there are situations, because I know insolvency cases. So especially in case of insolvency cases, there are a lot of situations where we don't have all the information. In fact, a lot of cases, the insolvency professional himself is challenged with information. So, and there are other situations also where there is no clarity. So how can we ensure that our work is very clearly highlighted the constraints, the challenges which we have faced, and basis what we have arrived at the value. So Sanketji, this is going to help you answer your questions, which we just discussed some time ago.
Yes, sir.
Okay. Now, can anyone tell me what is missing over here? Anyone?
Caveats are not there, I think so.
Okay.
Yeah.
See, this is as per Rule 8, Clause 3. And this gives a very clear information about what at least should be there in the valuation report, at least. Now, very important part, which they say should be there, is the caveat limitations and disclosure. So 2019, sometime in December, if I'm not wrong, IBPI gave a very good guideline, very descriptive, and some of the aspects I'll cover in the presentation also, that these are some of the caveats, limitation, disclaimers, which we should be using in the report. And this is basically to help and protect the RV. As I said, that during the assignment, there will be a lot of challenging situations. So this is where RV can protect himself, herself, using this particular aspect. And honestly, I have seen a lot of valuation reports. Sometimes the heading would be disclaimers. Sometimes it will be assumptions and limitations. Please ensure that there is a very specific clause in your report which says caveats, limitations, and disclaimer. Make it very, very clear. And in that also, I would advise, if it is possible, try to segregate the caveats, limitation, and disclaimers. It becomes very, very clear so that the person who's reading the report, sometimes in such cases, especially in case of insolvency, the honorable judge also would be one of your clients who would be reading the report, user of the report. So it becomes very important for them also to see, okay, on what circumstances the RV has given so and so value, and what are certain limitations or conditions, or maybe certain warnings which RV has provided in its report, basis which you should be able to take a decision on the valuation provided. So some extracts here. I want your opinion if this looks good. Any thoughts about this? Was one of the extract from the report. Do you think this is correct?
No, minimum 3 years should be there.
Okay. Anybody else?
Also, this is not that much, looking very professional. There. No clarification of where he can be answered after this.
See, one thing is very clear. The data retention policy is for the RV. It is not for you to tell the client. Okay, you are actually regulated by the code, and you have to maintain at least for 3 years. Depending if there is a legal proceeding going on, you have to maintain till the legal proceeding is closed. Now, you can't tell the client that you will be maintaining the data only for 2 years. So these kind of disclaimers or clarifications, I don't think these will be the right approach to put it. Let's look at the second one. Anything wrong over here?
Sir, they have restricted the value. That value varies, and also it is only up to the 6-month period. Like they have restricted the validity of the report. So both are wrong.
I think, sir, 1 year.
1 year. Umveji is saying 1 year. Okay. Why 1 year, Umveji? On what basis?
As per my knowledge, sir, report valid from date of valuation to 1 year.
There is no validity. There is no validity. Only the FEMA guideline says the report should not be older than 90 days. But there is no validity period given by any other law, as per my understanding. I might be wrong. Means that is the market criteria which is fixed by the people, that valuation report older than 6 months is not acceptable, or the 1 year is not acceptable. But no law says that this is the old valuation. Only few of the laws says, okay, the valuation report should be conducted within this month period. Like FEMA is saying within 90 days of the happening of the transaction.
Okay. Any other views? Anybody else? See, valuation.
I think mentioning time period itself is in itself is I think it's not very right. I think we should rather than mentioning attaching any time period to the validity of the report, the value of the asset can change on the very next day also if something out of which is not in the control or external or internal any due to change in any factor, the value may be impacted. So I think we should, rather than attaching a time period, we should say any material change in any of the either the purpose or the condition of the market, or any factor that is beyond control, it can have impact on the market value of the
actually valuation report value is at the date of CIRP date.
And in the given circumstances.
It will be on given circumstances. It will not change actually.
Absolutely.
The date where it is,
So after 10 years also, if I see the valuation report and let's say the date was 12th March 2023, that the value as of that date will be the value. It cannot change. Correct? So these kind of statements definitely are not warranted for. So I think all of you are very right. Omirji, a correction that we cannot have a specific time period for valuation. So whatever value is as of date, that will remain the value till the time the report is being used. As of date.
Sir, one more thing, sir. The valuation period is only for 6 months. It is in English court order, it is there. Yesterday, that Sabath sir told. It is 6 months validity. In court order.
Sorry. I couldn't follow you. What do you mean by court order?
That English court order, he has given one court order. Is quoted here. For the wrong valuation done, it is quoted, sir, actually. Yesterday only it is.
Okay, I'm not aware about that. Maybe if you can put it on the group chat, so that everybody gets to know about it. We all can check, and at least for our information, that would be good.
And one more thing, sir. That is, agricultural land can be valued by the L&B. Is it correct?
Yes, obviously it has to be valued by L&B.
L&B value?
Yeah, it's L&B value.
No, the
I think sir, no sir.
under 34 AB or under Company Act?
Company Act, it's very clear. If it is a immovable property, if it is a land, it has to be done by the L&B valuer. Am I missing something?
Sir, then we have to write under this value. If you have done the agricultural land, then we have to write it is under the valuation is done under Company Act.
Correct. Correct. As of now, registered valuer is recognized only by two acts. One is Companies Act and second is IBC. So if you are doing a valuation under these two acts,
sir,
it's
this
very
is
clear.
Anthony.
Yes, Anthony.
Sir, if that agricultural land without crop, then it can be valued by the land and building valuer. Is it, sir?
Okay, I think here we'll have to look at two different things. So one is whether we are valuing the land or whether we are valuing the crop on the land. Anthony ji, you are on mute. If you're saying something, I'm not able to hear you.
Yes. That's the thing I want to tell.
Yeah, so if it is land, I think it is very straightforward and clear. If it is Companies Act, you are going to value, it will be valued by a land and building RV.
And also whether it can be watered by natural source or by some, that a channel like that. How water source come to the land, accordingly also the value will be vary.
That is irrigated,
non-irrigated. Market conditions.
It is irrigated land and non-irrigated land, I think.
Yes, sir.
But okay, I think very specific point which is getting discussed is who will be doing the valuation. So are we all on the same page that it will be the land and building RV who will be doing the valuation?
Yeah, I think you're absolutely correct. For IBC cases or for Companies Act, it is a class of valuer is important. So therefore, land and building has to be done by the land and building valuer only.
Correct. I think somebody, Rahulji, has put it, I believe agricultural land with Agriculture Surface Act. I'm not able to follow you, Rahulji.
Yes, sir. In it is L in IBB.
That was a typo on my part. I think the agricultural land is exempted from the applicability of Surface Act.
Yeah, that's a completely different issue. That is regarding the enforceability. That's an enforceability. That has got nothing to do with the.
Correct. Shivananji, you were saying something?
Sir, agricultural land cannot be mortgages. If it is mortgage, then only the Surface Act will apply. So that problems come not arise here. But in L&B, the IBB registered, he is given that agricultural land cannot be valued by this. Only movable, that is land and buildings. So that means plot and buildings. But in some clarification from IBB, it is said that L&B valuer can do the agricultural land.
I think, sir, the confusion is arising from the fact that, erstwhile valuers have also been carrying out valuations under the, registration with the, section 34 AB of Wealth Tax Act. Now, whenever the valuers used to get registered as valuers under this, wealth tax, it used to specifically mention that the valuer can do valuation of immovable properties except land, mines, or agricultural land. So I think that may have been the source of confusion, here.
Possible. Okay. But I think in my view, I'm very clear that if it is Companies Act or IBC, it has to be L&D.
So under wealth tax, the registration clearly states that the valuer cannot value, mines, quarries, ores, and also the agricultural land.
Sir, one question is arising here. If agricultural land has a plant or trees, So
sorry, agricultural land has a plant.
Plant or trees.
Trees, okay. Huh.
Trees. Under valuation as a RV, as per IBBI, we can evaluate the value of plant trees.
I think there is a very specific accounting standard for that. It's called biological assets.
Yes, sir.
All these trees, plants, crops, they will be part of it. I'll have to recheck it. But in this case, in my view, I think the SFA valuer might be the right person. Why? Because here is where you need to understand what would be the dynamics. If you're going to sell it in the market, what would be the market value of those crops, trees? If there is a tree which is going to produce, say, for example, apples, right? What is the quality of apple? What is the market value of this apple? And then that is how you will generate revenue from those particular output. So there will be a specific valuation using the biological assets accounting standard and do the valuation.
It means two SFA and land and building valuer will jointly make evaluation.
Yes, yes. So so yes, you're right. So overall, it will be done by both of them, right? If you have to take the total value, maybe one person would take the lead. Either it will be the SFA or the land and building. The other person can attach as an expert his valuation. Then there will be a total valuation. But there will be stated very clearly, this is the value of the land and this is value of the crops. The reason being because, see, in case of crops, it is always vulnerable to the natural calamity, whether there is monsoon, not those things, a lot of factors are there. So the value could change, but land eventually it never depreciates. So the value might appreciate for a longer duration. So that is why these two will be considered separately. I hope that answers your question, Omvirji.
Yes, sir.
Yeah, we have done a case on this. We did a valuation of a tea garden, couple of tea gardens. Yeah. So there we applied the same principle, and there the biological assets, that standard talks about the yield method. So we took the yield method, but then you are right. Basically, this is the same thing. We took the help of a land and building valuer and a SFA valuer. Combinedly, they did it. A planter machinery valuer was also involved. He did the valuation of the assets in the where the tea crops are being, processed. So the workshop and all assets were done by. So all three valuers they came.
Three. Okay. Great. Thank you so much for sharing, sir. This is useful. Thank you. Okay. So since we have less time, I'll be a little fast here. I think this I'll skip it because we know that these kind of things would not be part of your valuation report. These kind of disclaimers, just to highlight, as per, if you see the first one, it says as per the client requirement and scope of work. The report is having limited scope of work as per its fields.
नहीं बाहर नहीं है भाई, अंदर नहीं बहुत हो जाएगी ना वो लाइट इससे खत्म हो जाएगी.
अनिल जी, ओके.
सब तो साला बिगड़ जाता है हिसाब किताब एंजिनी के.
I don't know why. Okay. So if you see here, now you can't say the format has limited fields and that is why the scope got limited. You as a valuer will always have to provide the opinion on the valuation of that particular asset. So we can't say there is a limitation because of the fields and the format. Second, if you see one by SFA, it says appropriate discounting factor against each SFA item has been applied based on the nature and the level of difficulty, which makes sense also. But you have to explain the level of difficulty. You can't just put a very generic statement. So having said that, if you see these valuation rules, here it says very specifically that Rule 8, RV shall state caveats, limitation, and disclaimers. And to the extent they explain or elucidate the limitations faced by the valuer, which shall not be for the purpose of limiting the responsibility for the valuation report. Now, this is very important, which we saw in one of the disciplinary cases also, that you cannot say, I was not able to visit the site because I had visited last year, because there was no transportation available, or whatever those lame reasons you cannot give. If it has to be done as per the law, we have to do it. So you cannot limit your responsibility using these CLDs. So that is a very, very important point. Second, if you see here, it says the rule aims to ensure that the valuation report does not carry a disclaimer which has a potential to dilute the responsibility. Same. So first is limiting the responsibility. Second is you're putting a disclaimer to dilute the responsibility. For example, this was done by so-and-so person. I have not got the chance to do the due diligence. I was given the forecasted number by the client, but I have relied completely on that. So you cannot put those kind of statements. You have to do your due diligence. You cannot limit or dilute your responsibility. So if you see one of the examples in one of the report, it says, the RV says, I have not carried out a due diligence. Now, due diligence is part of the rule. You cannot say that I have not carried out. So this will not be acceptable. And RV shall prepare the valuation reports under Rule 8 in adherence to these guidelines. So as I mentioned, 2019, these guidelines were published by IBBI. And IBBI will be expecting you to follow these guidelines. Also, I'll tell you one thing. In Videocon, I'm part of this expert committee. So I'm part of this peer review also. So every 6 months, wherever we get this valuation reports, in the format, it says very specifically whether caveat limitation disclosures were sufficiently disclosed by the RV. Did the RV was trying to limit or dilute his or her responsibility? So the format is very clear. And as a peer reviewer, we have to look into all these factors. So very, very important. So ensure that you mention the disclaimers, caveats, limitations very clearly without impacting your responsibility. RVO shall monitor adherence to these guidelines through scrutiny or valuation report. Exactly what I said during the peer review every 6 months. Now, why there is a need for CLD? Anyone? What could be the need?
So I want to know what is CLD.
CLD stands for caveats, limitation, and disclosures. Okay. I'll cover this.
It is required. It is required so that the reader can, justify. The reader can take the conclusion that what are the main limitations or the main, main limitations of the valuer, and valuer can also save himself based on those kind of the judgments or the results which are not impacting him or which can impact him. So those are the main reasons for putting these caveats and limitations.
Correct. Basically, this is going to help the RV to protect himself. Very correct. So here, I'll just show some of the newspaper or what was there in the news. Indian startups valuation race mustn't be reckless. Okay. So this was something in recent news, September 2022. It says SEBI's tricky search for startup valuation. Now, if you read this, I'll quickly read out. It says that it is asking the private equity and venture capital funds to share details of values employed and practices followed, right? Basically, they want to understand how the valuation is being done. Why? Because somewhere maybe there are certain challenges being faced by the valuers, but this is not very clearly depicted in the report. There are certain assumptions which valuer has to make, inevitable, but they are not getting reflected in the report. Another thing, if you see here, there was why are Indian unicorns overvalued when valuation itself is linked with future earnings? So a lot of different situations are there where the valuation reports are not very clearly depicting the actual value. Either they are understated, overstated. Also, very important that people take decisions based on this valuation report. So if it is not very clearly stated, their decisions may go wrong and eventually they will blame the valuer itself. So the need for CLD basically says that there are practical challenges. Okay, so first challenge would be that maybe we know that the price and value are two different things. So valuation is an estimate. So the estimation could be different. Today, all of us do a valuation of the same asset. Everybody will have a different value. So there are multiple parameters, there are multiple factors which we have to take into account. Same thing, 2 or more RVs will probably arrive at a different estimate. That could be because of the difference in purpose of valuation. We have to understand different in circumstances. So classic example would be a 65-year-old person who's running let's say a factory, and let's say his children are settled abroad. But if he wants to now he's looking for an investor to sell his entire business. So the valuation for this person would be different compared to the same factory being run by Anil sir. Anil sir. Thank you. Okay. So two more RVs will definitely have a difference. So example was that one 65-year-old man selling his business who wants to retire and settle abroad. Second, the same business being run by 4 young individuals. So obviously, when you do the valuation, the going concern aspect changes. Okay. Of course, as Anil,
sir, ask them to put on mute.
No, I don't know. I can put on mute, but every time he's unmuting himself. I don't know if there is somebody from Divya Jyoti, if they can talk to Anil sir, because it's very disturbing.
Yes, sir, I'm calling you.
Kajalji, if you can tell Anil sir, it's very disturbing actually.
Yes, I'm calling him. I'm telling him.
Thank you. Thank you. Okay. So also a lot of cases, we see that there is not sufficient information expression available to RV. I think we saw this in previous examples also, that during liquidation, CRP, there is a challenge to get the information. So this is where CLDs can be used to protect the RVs. Now, in this case, what will happen is the possible impact could be that if you don't explain, if you don't share, or if you don't give what are the different situations basis which you have done the valuation, in that case, obviously the integrity, the question will be always be against the RV. So RV will be questioned, challenged that there is something wrong. So RV has to make it very, very clear. Now see, whenever you put anything in your report also, that has to be supported by certain documentation. The discussion, you can't say I had verbally discussed with the liquidator and then based that information, I have given that assumption. So like if you remember the site visit, or maybe it's assumed that the fixed deposit were adjusted with a letter of credit. So based on discussion, verbal discussion with the liquidator, these things will not hold good. Because eventually, as I said, the decisions taken on the valuation report will get impacted. Now, how the CLD will protect? It will mitigate the RV's potential risk, right? One is by cautioning or dissuading others that when you are doing the valuation, this is the information which you got.
हो गया तेरा फोन का काम हो गया क्या? देख रहा है?
Anil sir, I think you are a chairman, right?
Hello.
Anil sir?
Ji sir.
Sir, you are a chairman of Agra Local Center, if I'm not wrong.
Yes, sir.
Sir, please put your line on mute. You are disturbing others, sir. I'm so sorry.
Okay, sir.
So this will protect the right of RVs by cautioning, dissuading others that when they are going to use the valuation report, they're going to take a decision. Obviously, they know that under what circumstances the valuation was done. If there are specific factors which they should consider, and then basis that they should take the decision. Limits the liability of the RV, this we discussed. Protects the RV from incurring liability. Limits the liability of the RV, yes. I think this we discussed in detail because as you all know that there are different liabilities. The minimum is 50,000 rupees. If there is something wrong with the report, if it has been identified, right? Now we saw in those disciplinary cases that you could lose your registration for 6 months. One of the big RVs also, they lost. They will not be able to take up any assignment for 6 months. It's a big impact. Eventually, it is going to impact the credibility of the RV or the RV. So this is where CLD should help you. The report reader will understand the risk involved and accordingly act upon the valuation report. Now, before I get into tips to adding CLDs, I think one team member said that they are not aware what is CLDs. What I will do is I'll just first clarify what exactly is CLD. Obirji, I think you are not aware, right? What is CLD? Anybody else who's not aware what is CLDs? Okay, Anthony ji is aware, I think. Okay, can anyone tell me what exactly this sign is? what it means? Anyone?
I think it means be careful or be cautious.
Correct.
It means warning. It's a warning.
Absolutely right. It's a warning, right?
I think sir, valuer. Can I speak in Hindi?
Yeah, please. बोलिए हाँ बिल्कुल.
मुझे लगता है कि हम कैबिनेट या फिर डिस्क्लेमर रखते हैं तो हमें जो प्रेजेंट सिचुएशन में आज जो वैल्यूएशन कर रहे हैं उसको फर्दर पर्सपेक्टिव से नहीं जोड़ा जाएगा.
मतलब मैं समझा नहीं.
जैसे कोई लैंड है उसका डेवलपमेंट प्रपोज्ड है तो उस हिसाब से कोई भी लैंड है. आई एम बिलोंग फ्रॉम वृंदावन.
हाँ.
तो यहाँ पर एक कॉरिडोर का निर्माण हो रहा है.
हाँ.
जो लैंड वैल्यूज हैं वो बढ़ चुकी हैं बहुत ज्यादा. 2 टाइम्स 3 टाइम्स. आज मैंने वो 2 टाइम्स के हिसाब से वैल्यूएशन कर दिया कि कॉरिडोर बन रहा है बहरीजी कॉरिडोर. लेकिन अगर कल वो पोस्टपोन्ड हो जाता है, आधा रह जाता है, तो बढ़ी हुई वैल्यूज ऑलरेडी कम होने लगेंगी.
करेक्ट.
तो इसलिए हमें डिस्क्लेमर रखना चाहिए, CLD रखना चाहिए कि हम आज की सिचुएशन को जस्टिफाई कर रहे हैं.
बिल्कुल सही है. बिल्कुल सही है. काजल जी, can I remove Anil ji? I'm so sorry to ask for that, but I think this has been multiple times.
Sir, I'm removing him.
Okay, thanks. So ओमवीर जी, आपकी बात बिल्कुल सही है. आज की डेट में जब कॉरिडोर बन रहा है तो ऑब्वियसली आपकी वैल्यूएशन थोड़ी ज्यादा ही होगी. लेकिन जब 2 साल के बाद कोई सिचुएशन आती है जब नहीं, बट आपकी वैल्यूएशन तो एज ऑफ टुडे है, करेक्ट? बेस्ड ऑन द सर्कमस्टेंसेस एज ऑफ टुडे. एंड आई एम श्योर यू विल बी एबल टू कोरोबोरेट विद सफिशिएंट एविडेंस दैट आज इसकी वैल्यू डबल क्यों है, करेक्ट? बिकॉज डिमांड ज्यादा है, सप्लाई कम है, करेक्ट? मे बी द प्रॉपर्टी का लोकेशन ऐसा होगा कि वहां पे ज्यादा डिमांड होगी. एम आई करेक्ट?
सर, बाहर से लोग इन्वेस्ट करने के लिए आ रहे हैं, इसलिए प्रॉपर्टी की डिमांड बढ़ी है. लेकिन अगर कॉरिडोर कल नहीं बन पाता है तो वो लोग अपना जमीन सेल करेंगे.
करेक्ट.
वो जमीन सेल करेंगे तो सप्लाई ज्यादा हो गई, डिमांड कम हो गई, तो
रेट वो उस टाइम पे होगा.
वो उस टाइम पे होगा. एक साल बाद
बिल्कुल.
या कुछ पब्लिक के द्वारा एजिटेशन हो जाता है कि हम नहीं बनाने देंगे.
करेक्ट.
हम पुराने चीजों को मेंटेन करना चाहते हैं, हम उन्हें नहीं बनाने देंगे. तो उस केस में लैंड वैल्यू आपकी जो वैल्यूएशन रिपोर्ट है वो आज की है, कल को ध्यान में रख के है.
नहीं, कल को ध्यान
रखिए, क्योंकि आज उसकी वैल्यूएशन 40,000 वर्ग मीटर है. लेकिन कल हम जो सोच रहे हैं कि वो 40 से 50 होगा. अगर लेकिन कॉरिडोर नहीं बनता है, बाहर से जो लोग इन्वेस्टर आ रहे हैं वो इन्वेस्टर आना बंद हो जाते हैं, तो उस केस में वैल्यूएशन वो जो रेट है वो 30 पे भी आ सकता है, 25 पे भी आ सकता है.
बिल्कुल.
तो इस चीज को डिफेंड करने के लिए हमें डिस्क्लेमर देना चाहिए रिपोर्ट में कि ये आज का मेरा वैल्यूएशन है और जो प्रेजेंट कंडीशंस के हिसाब से वैल्यूएशन है उसी को कंसीडर किया जाए.
करेक्ट. बिल्कुल. इसमें ना उमेश जी, मैं आपको एक बात बताऊंगा कि वैल्यूएशन रिपोर्ट में 3 डेट्स मेंशन की जाती हैं और उसमें से एक डेट होती है वैल्यूएशन डेट. तो आपने अगर आज 40,000 पर मीटर भी बताया है तो वो आज की डेट में है. सो दैट इज वेरी क्लियर, राइट? और जब आगे चल के आप बताओगे बिकॉज ऑफ द डिमांड, आप कहीं ना कहीं से प्रूव कर पाओगे कि आज की डेट में ये जो मार्केट के ट्रांजैक्शंस हुए हैं वो 40,000 में हुए हैं.
करेक्ट सर. एक प्रॉब्लम ये है सर, इसके साथ प्रॉब्लम ये आ रही है, जो मैक्सिमम रिपोर्ट मेरे सामने आ रही है कि क्योंकि यहाँ पे पिछले 3 साल से सर्किल वैल्यू कोई चेंज नहीं हुआ है.
ओके.
तो गवर्नमेंट को स्टाम्प जाता है उसी सर्किल वैल्यू का जो पुरानी 3 साल की वैल्यू चली आ रही है. लेकिन जो मार्केट वैल्यू है और जो आज कह सकते हैं कैश ट्रांजेक्शन है वो बहुत ज्यादा बढ़ गया है. तो आप कैश ट्रांजेक्शन का तो पता नहीं लगा सकते ना,
उसमें नहीं पता चल सकते
क्योंकि आप किसी भी तरह से उसको डिस्क्लोज नहीं कर सकते. आपको उसका कोई डाटा मिलेगा. तो आप किस बेसिस पे कहेंगे कि मार्केट वैल्यू इतनी है? आप मान लीजिए
तो 40,000 जो है आप बता रहे हैं वो कैसे आया? वो उसका तो कोई सोर्स होगा ना?
नहीं सर, उसका कोई सोर्स नहीं है. हम उसको 10%, 20%, 30% हम पुराने से इंक्रीज करते हुए चले जाते हैं या 100%. और जो भी डाटा मार्केट में अवेलेबल होता है, जो पिछले साल के कंपैरिजन में हम उसको 20%, 30%, 40%, क्योंकि यहाँ पे जमीनों के दाम नियरली 3 साल पहले की कंसिडर करता हूँ तो 100% बढ़ चुके हैं.
अंडरस्टूड।
तो ये एक
इसकी
एज ए
हाँ, ये
वैल्यूअर बहुत बड़ी
प्रैक्टिकल।
समस्या क्रिएट हो गई है।
बाकी के वैल्यूअर्स कोई हैं लैंड एंड बिल्डिंग में जो सेम सिचुएशन फेस कर रहे हैं?
सर
एनीबॉडी?
बहुत लोग वैल्यूअर हैं, लेकिन सबका
सर हम
यहाँ
लोग
पे
तो
सिस्टम अलग है
एडवर्टाइज
सर।
निकालते हैं इंटरनेट पे ज्यादातर, वो
करेक्ट, उसमें जैसे मैजिक ब्रिक्स हो गया या ऐसे वेबसाइट्स। हाँ,
जो रिप्रेजेंटेटिव एक्सपेक्टेशन ऑफ द सेलर होता है,
हाँ,
तो वो तो क्या डायरेक्टली हमको प्राइस का या मार्केट का आइडिया नहीं दे सकता, लेकिन एक फेयर आइडिया मिल जाता है
Fair
कि
idea.
भाई हाँ, कि ये रेंज एक्सपेक्ट कर रहा है आदमी जिसका प्रॉपर्टी है, तो उसके आधार पे उसको फैक्टराइज करके और ये सब करके आप रेट के करीब पहुंच सकते हैं। लेकिन ज्यादातर हम लोगों को इंडेक्स टू ढूंढना चाहिए, वो एरिया में कोई ना कोई तो वैलिड ट्रांजैक्शन हुआ होता है। ऐसा तो होता नहीं है कि कोई ट्रांजैक्शन आपको मिलेगा ही नहीं।
सर वो ऑनलाइन जो होता है ना, ऑनलाइन जो यूपी के अंदर वो होता है खतिया खतौनी वाला एक ऑप्शन होता है ना यूपी, उसमें ऑनलाइन उस एरिया में आप देख लेना, बैनामे आ जाएंगे निकल के, ठीक है? उन बैनामों को डाउनलोड कर लेना, वहां पे आपको रेट पता चल जाएंगे, ठीक है?
एक एग्जांपल बताता हूँ सर। अभी एक प्रॉपर्टी आई थी मेरे पास वैल्यूएशन के लिए, जिसकी टोटल मुझे एग्जैक्ट याद नहीं है, उसका मैंने वैल्यूएशन नहीं किया क्योंकि उसका 5 करोड़ का टोटल उन्होंने वैल्यू बताया मुझे, और 1,80,00,000 का ऑनलाइन ट्रांजेक्शन और रेस्ट अमाउंट कैश हुआ। और दैट इज ऑन द मेन रोड प्रॉपर्टी, प्राइम प्रॉपर्टी। और जो उसकी जो आगे रोड है वो 100 फीट की रोड है। तो उस क्लाइंट का कहना था कि मैंने 5 करोड़ की सर मैंने खरीदी है, व्हाट कैन आई डू? आप इसकी वैल्यू 3 करोड़ लगा रहे हैं, मैंने 5 की खरीदी है। अब आप इस चीज को कैसे फेस करेंगे कि क्लाइंट आपको बोल रहा है मैंने 5 की खरीदी है, मैंने कैश दिया उसको। मैं एक कस्टमर बनके फिर उस बिल्डर के पास गया, तो वाकई उसकी बात सच थी, 5 करोड़, उसको 3 करोड़ जो है कैश चाहिए था। मैंने कहा 3 करोड़ कैश कोई भी कैश कैसे दे देगा आपको? बोले सर वो देना पड़ेगा। ऐसी सिचुएशन जब फंसती है तो आपका नॉलेज, आपका मतलब आप असाइनमेंट छोड़ने के अलावा आपके पास कोई ऑप्शन नहीं होता, मुझे ऐसा लगता है।
नहीं मतलब असाइनमेंट नहीं छोड़ो, बट आई थिंक देयर समवेयर यू विल हैव टू फाइंड अ वे आउट मेरे हिसाब से। तो अब इसमें क्या
वे आउट निकाल सकते हैं सर? मैं
हाँ,
इसमें मेरे दो सबमिशन है। आई थिंक जो ओमवीर सर बोल रहे हैं दैट्स अ वेरी प्रैक्टिकल सिचुएशन, जिसमें वैल्यूअर्स अपने आप को पाते हैं अमूमन। लाइक इसमें दो हिस्से, वी कैन बाइफरकेट दिस इशू इनटू 2 पार्ट्स। वन इज, जैसा ओमवीर जी ने बताया कि पिछले साल भर से 2 साल से एक स्पेक्युलेटिव एनवायरनमेंट पैदा हो गया है कॉरिडोर के बनने की वजह से, जिस वजह से लैंड प्राइसेस में, जो मार्केट प्राइसेस में बहुत ज्यादा इंक्रीमेंट आ रहा है या बहुत ज्यादा एप्रिसिएशन देखने को मिल रहा है, जो कि अभी भी कंटिन्यू कर रहा है। सो ये जो फिनोमिना है, ये रिपोर्ट में मेंशन हमें करना चाहिए। नंबर 1, दैट इट हैज बीन ऑब्जर्व्ड दैट ड्यू टू द कंस्ट्रक्शन ऑफ ए पर्टिकुलर प्रपोज्ड कॉरिडोर, land prices ने have seen appreciation in the past, जब से अनाउंस हुआ है प्रोजेक्ट। वन इज दिस थिंग। सेकेंडली, जहां तक वैल्यूएशन की बात है, मुझे लगता है कि जितना ज्यादा हम मार्केट में जाकर के लोगों से बात करेंगे, अगर 40,000 रुपए मीटर का रेट अगर मार्केट में निकल के आ रहा है, और जो सर बता रहे थे कि अब से 1 या 2 साल पहले मेरे ख्याल से आप सर 15-20 हजार या 25 हजार रहा होगा, अगर ये हमें कहीं ना कहीं से इंफॉर्मेशन आ रही है, इसका मतलब मार्केट में वो इंफॉर्मेशन अवेलेबल है। अगर 40,000 रुपए मीटर, आई एम सेइंग कैश की बात कर रहे हैं, हो सकता है सर्कल रेट 5, 7, 8
राहुल जी थोड़ा जल्दी बोलिए, बिकॉज़ आई हैव टू कवर लॉट ऑफ थिंग्स। प्लीज बी टू द पॉइंट।
My only submission is, if a figure is coming of 40,000 rupees, then again I think we will have to dig deeper in the market and speak to a lot of people, take references। अगर मार्केट में, अगर व्हाइट में भी अवेलेबल नहीं है, सो अगर ब्लैक में भी, कैश कंपोनेंट में भी रेफरेंसेस अवेलेबल है, वी हैव टू डॉक्यूमेंट देम। एंड अपनी रिसर्च को जितना ज्यादा हम डॉक्यूमेंट कर पाए उतना ही बेहतर होगा। आई थिंक इससे ज्यादा कुछ और आप कर नहीं सकते।
Makes sense. Ashok sir, I think you have to say something, right? Yeah, please go ahead.
मुझे वही कहना है कि मैं महाराष्ट्र से हूँ, और मेरे एक क्लाइंट ने लास्ट ईयर एक लैंड लिया था, जो कि जैसे वो कह रहे हैं कमर्शियल एरिया है, वहां पे करीबन 1,60,000 रुपए स्क्वायर मीटर से लिया। उसका रेडी रेकनर का रेट 15,000 रुपये है पर स्क्वायर मीटर। और उन्होंने लैंड लेने के बाद, मेरे क्लाइंट ने लैंड परचेस करने के तुरंत बाद विद इन ए मंथ उनको करीबन 2.5 लाख रुपए पर स्क्वायर मीटर की डिमांड थी। तो आप इसको कैसे देखते हैं? क्योंकि देखिए मेरा
प्लीज,
जो हमारे यहाँ महाराष्ट्र में सेल डीड होता है, नॉर्मली क्या होता है, स्टैम्प ड्यूटी और व्हाइट मनी बचाने के लिए लोग अक्सर रेड इलेक्टर के हिसाब से ही परचेस डीड करते हैं, सेल डीड करते हैं। मतलब 15,000 रुपए स्क्वायर मीटर से उन्होंने परचेस किया और उसके बाद एक्चुअली उनका जो डील हुआ था, जैसे ये कह रहे हैं बाकी कैश देके 1,60,000 में स्क्वायर मीटर से वो एक्चुअल में हुआ। उनको डिमांड थी बाद में 1 महीने के बाद उस 1,60,000 स्क्वायर मीटर से जो लिया उन्होंने 2.5 लाख रुपए। तो आप इसको कैसे देखते हैं? हमने उसका क्या मार्केट रेट, कैसा फेयर मार्केट वैल्यू कैसी लेनी चाहिए?
अगर आपके पास प्रूफ है 2.5 लाख का तो ही आपकी रिपोर्ट में वो आएगा, अदरवाइज यू विल नॉट एबल टू प्रूव इट।
मैं वही कह रहा हूँ, जो ऑफ द रिकॉर्ड है वो सब
करेक्ट, वो आप नहीं दिखा सकते। मतलब मेरे पास इसका पूरा जवाब नहीं है अशोक सर, लेकिन अगर आपके पास 2.5 लाख दिखाने का कोई तरीका नहीं है, you cannot support with any evidence, then I don't think you should be able to do that. In that case,
sir,
it is better to
in
approach.
English.
Anthony ji. Yeah.
Yes, sir. Please see in English.
Sorry. Yeah, actually,
so
yes.
My client will not accept the valuation report.
I can understand.
As per 15,000 rupees square meter, what he will say, कि उसका जो है total valuation will be very 10% only.
Correct.
That's a problem.
I mean, it's a practical situation.
If we give at the rate of 1,60,000 rupees per square meter, then it is risk on our part.
I agree. This is something which is.
मेरा कहना है कि that problem is everywhere, all throughout the India. अच्छा, हमारा छोटा प्लेस होने की वजह से there is no magic brick, nothing, 99 acre वगैरह कुछ भी नहीं है.
So you don't have anything to support that on what basis the market value has been arrived?
Not at all.
Correct. Okay, I'll quickly, Mahendra ji, please be a little fast. What is your question? I have not to cover.
I recently came across one incident where a within family transaction has happened just after the currency ban. Okay. And a valid purchase has taken place for 30 lakh rupees. One flat is purchased within family from a sister to her father and from father to his son for 30 lakh rupees. Valid transaction when the stamp duty was 20 lakh rupees. So if such transaction comes in front of you, you should not consider it as a valid transaction because the date itself indicates that it is siphoning of black money.
Absolutely.
Another thing is it is within the same family that transaction is taking place, so it is not fitting into fair market value criteria.
Absolutely right.
So
Absolutely.
we have to be very careful with respect to such things. Alone looking at some evidence is not enough. That is what I am going to say.
Very good point. Very good point. Sadhbir ji, over to you. Please be to the point because we have very less time.
Sir, what I want to say is this thing. Generally, people do registration on the government rates, but they purchase black money. So what we do for the market value, we visit the location and meet the local people, property dealer, and what we find that it is right. They had given in black. So we measure what we observed market rate for banks. I had not done any valuation for IBBI, but I used to do valuation for the banks. But banks consider up to 1 year the rate of purchase value property at which the party has purchased. अगर 1 करोड़ की प्रॉपर्टी उसने 1 नंबर में दिखाई है तो बैंक उसको एक ही की मानेगा 1 साल तक. बेशक मैं की प्रॉपर्टी बता रहा हूँ as per market rate.
Okay. So this is a practice. I think you are saying that. Understood. Understood. Interesting. Okay. Quickly, Rahul.
Sir, one question is from my side, please.
Yeah, go ahead. But please be to the point.
अक्सर से होता है सर, हाँ, वैल्यूएशन हम जब बैंक के लिए करते हैं तो वैल्यूएशन का पर्पस बैंकिंग हो गया, लोन हो गया, और हम जब ट्रांसफर प्रॉपर्टी के लिए वैल्यूएशन करते हैं तो वहां पर अलग पर्पस हो जाते हैं। क्या ऐसा पॉसिबल नहीं है कि दोनों रिपोर्टें एक साथ IBBI कंसिडर करें कि दोनों रिपोर्टों को हम एक ही कंसिडर करेंगे?
नहीं, डिपेंड करता है आपका एक जगह क्लाइंट बैंक है, एट वन पॉइंट ऑफ टाइम यू हैव योर बैंक एज अ क्लाइंट,
वैल्यू दोनों में सेम होना चाहिए, क्योंकि अभी मुझे पता है कि मैंने एक इंडस्ट्री का बिल्डिंग ट्रांसफर का था तो उसमें उन्होंने बिल्डिंग की वैल्यू कम करवाई थी।
किसने
वो
कम किसने कम करवाई?
क्लाइंट ने।
No, so which means the client has appointed you as a valuer.
Valuer.
On other hand, the banker has appointed you as a valuer.
नहीं सर, मुझे क्लाइंट ने ही अपॉइंट किया था और एक तरफ बैंक ने मुझे अपॉइंट किया। बिल्कुल सही है।
For the same property.
सेम प्रॉपर्टी। तो उसमें उन्होंने जब ट्रांसफर प्रॉपर्टी के लिए थी तो उन्होंने डेप्रिसिएशन भी लगवाया, सब कुछ लगवाया कि इससे वैल्यू उसकी कम हो जाए, लेकिन दूसरे हैंड पे उसमें बैंक के लिए ज्यादा लोन देने के लिए सेम रिपोर्ट दी गई, लेकिन दोनों की वैल्यूज में काफी डिफरेंस था। क्या IBBI इस तरह का कोई रूल नहीं बना सकती कि दोनों सारी वैल्यूएशन किसी पर्पस के लिए जाएं वो सेम होंगी?
देखिए ओमेर जी, the rule is very simple. One is, in this case, if I have understood correctly, you have been appointed by the client on one side, and second is by the bank. Now, the same property, the bank is going to use that property for giving the loan to the client, correct? So you're saying when you gave the this thing to the bank, the value was higher, so that the loan value should be higher, obviously, okay? But if the date is same, I don't think if the value is same, the date is same, you can have two different values because the client is different. No, that is wrong. That is absolutely wrong. You're on mute, Umerji.
There was difference of 2 to 3 months.
So in 2 to 3 months, depends, the change cannot be, if 1 to 5% is still acceptable depending on the market conditions. But you can't say the property actually got appreciated by 25-30%. As an example, I'm giving.
Okay.
But then you have to justify. Agar wahan pe, for example, I said it was 1 crore in December, but in March it is 1.05 crores. So there is an increase by 5 lakhs, which is fine. Okay. You will have to justify, which should be fair.
इसका मतलब ये हुआ कि सर कि हमें चाहे हम किसी भी पर्पस के लिए करें, वैल्यू को हम नियरली सेम रखेंगे।
नहीं, एक सेकंड, पर्पस बहुत इंपॉर्टेंट है, नंबर 1. Second is the timing is important. The third is the asset is important. If in those 3 months, if there was a flat, eventually मान लीजिए for example, God forbid, अगर उस जगह में there was heavy storm which has come, right? All of a sudden things have changed. The value might also drop. So you have to look at that point in time, depending on the purpose, obviously.
Okay, sir.
Yeah. Okay, so we will quickly go to, I think this, everybody said very correctly, this is a warning. So warning is reported as a caveat. Okay, so this is, if you see on the cigarette package, you have these warnings, right? So this is in your valuation report, this is called a caveat. So which means a caveat could be a caution, warning, monition, qualification, provision, condition, stipulation, anything. Basically what gives the warning. Very, very important. So this warning is for the person who's reading the report. Now, why will you give a warning? Maybe there was certain information not available to you. Maybe if you're doing a valuation of a property, there is a family dispute, which is, as an example, that is going on. So you do not know who is the right owner of the property. Eventually, the dispute might go for a longer duration also. Or maybe there is some kind of a trespassing which has happened on the property. So these kind of warnings are very, very important. And this will you come to know only once you see the site, you seen the documents, you have to give this information to the reader of the report. Now, what is this? Can anyone tell me quickly?
Environmental conditions stop you up to the finish line.
Correct. So basically you want to reach the finishing line, but there is something which is holding you back, and it is not one, there are multiple things, right? And you are a professional. This is where the limitation comes into place, which means, for example, if you are not able to visit the site, if you have all the genuine reasons, you have to justify, and you have to say that I wanted to, but I was not able to visit because of why, what is the condition? Those are the limitations. Obviously, in that cases, you will be able to provide that kind of a value. So restriction on the scope of RVE's work, that would be one, which was eventually posed as a challenge to conduct the inspection investigation. Maybe you didn't get the data, and based on certain information gathered from market sources, you were able to arrive at the valuation. So there was a limitation, right? Maybe sometimes client will come to you and say that I want the valuation report tomorrow. How is it possible? You need certain time to go through the documents, blah, 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 but you're not able to do it. So you can always put saying that I got only 1 day. I didn't have the sufficient time to investigate or inspect the particular asset or the information. And due to limitation of time, these are the things which I was not able to do, though I wanted to do. So those are the limitations. So in some cases, limitations could be which is known to the RV before you get to the engagement. So you have to put in the engagement letter. Please be very careful. Second, maybe once you take up the assignment, then those limitations may arise. So you have to put it in the valuation report. But having said that, even if it is part of the engagement letter, please mention those in the valuation report also. That goes without saying. As far as fair market value, it should be same limitation. Okay, I think Rahulji were answering to this. Okay. IBC valuation, we all know the limitation. I think this is the best example. Disclaimer. So I know whenever we all watch movies, right? The first thing which you see is a disclaimer. No animals were harmed. If anybody, a similar person is identified, it's purely coincidental. So this is to actually specify or delimit the scopes and rights and obligations, right? So there could be certain situations which will be beyond the control of the RV, and that is where the disclaimer would help. So denying responsibility intended to prevent any liability arising from particular acts or omissions. If, for example, the valuation report is confidential, correct? So you are going to give this report to your client. Now, this has happened in one of the CRP cases in Delhi. One of the report actually went on getting circulated to all the people. So that is where it is not going to be a problem of the RV, but RV has to make it very clear that this report is restricted for the use of the client who has appointed me. And if the report is going beyond the client, it is obviously not going to be my responsibility. So this is where the disclaimer comes in place. Now, very quickly, I'll go back to the slides, which are some important tips. Yeah. So tips to add in the CLDs in the valuation report, right? So this we discussed. Ensure that any of your CLDs, caveats, limitation, disclaimer, they are not going to dilute your responsibility. Okay. They should not say that, okay, because there was no reasonable ground, or maybe the valuer has then just given the report for the sake. Those things should not be getting highlighted in your CLDs. Also, they should be capable of being tested through the crucible of legal evidences. So obviously, if you provide any specific limitation disclosure, you should have supporting documents. Tomorrow, if there's any legal evidence required, that if you are not able to do the site visit, you should have that communication between you and the RP or the liquidator. This information was not available. That all should be very, very properly documented and retained for your reference and also for any legal evidence requirements. RV may rights he or she wants to protect, obviously areas where he may be right subject to liability, clarify the contents of the valuation report, caution the reader. So these are the things which will actually ensure that where you need to add the CLD, basically protect, ensure that you do not have liability because of any specific action taken by the reader of the report. So those kind of things will actually help you to from a CLD perspective. However, a disclaimer will not by itself be able to exclude the RV's liability in respect of negligence in the performance of the duties. So as I mentioned that you cannot limit or dilute your responsibilities because of certain unavailability of information. If you had to do due diligence, you had to do it. If you couldn't do it, you have to very clearly mention that. And what exactly you try to do it, that also should come out very clearly. But that doesn't mean just putting a disclaimer, you're going to exclude yourself of any liability, which was supposed to do it as a part of your professional assignment performance. Now, some of the CLDs which should be part of your valuation report, there is an affirmative statement which says that the information provided and assumptions used by management have been appropriately reviewed. See, this is very important. Have been appropriately reviewed. Inquiries made regarding the basis of key assumptions in the context of the business. So basically, the valuer has looked at whatever information was provided and he has reviewed that information. Adequacy of information and time. As I mentioned, sometimes the client will actually say that I want the report ASAP, but you should mention that you got enough information, adequate information, and adequate time to do the valuation. If not, please ensure that you put it. Key factors which have material impact on the valuation. So, for example, I gave an example about a family dispute for a property. So eventually this will have a material impact on the valuation because of the ownership. So that is what should get highlighted in your report also. In case of valuation of tangible assets, especially for land and building and plant and machinery, the impact on the value due to faulty structural design or contamination, this should be very clearly mentioned in the report. This we have discussed. Now, there is CLD for all the asset classes. The restriction on the use of valuation report. This is not the responsibility of the valuer for unauthorized use. You should mention that. Now, responsibility of the RV. This is obviously only for the client who is appointed, not to third parties. So RV is not responsible to the third parties. Information accuracy, obviously you will not do the audit, but you have to make sure that you understand, you have reviewed the information, but obviously you will not give any assurance for the information. In case of SFA, there is a forecasted numbers. Obviously, this is not a confirmation by the RV that the forecast would be achieved. Post-valuation date events, obviously it will not be the responsibility of the RV. The range of value estimate, you can provide a range, yes, but here it depends on the client's value, if it is relevant, or in case of liquidation value, maybe, but the range should not be very wide. No responsibility to the actual price. Obviously, the value is an opinion and the price could be something very different. So a very simple example is a value of a diamond versus the price of a diamond, value of price water versus price of water. So value and price will always be different, but doesn't mean whatever value you put in your report becomes the price. It's just a guiding number. Reliance on representation of owners and clients, that is very straightforward. No procedures were performed to corroborate information. Again, no specific, like in case of land and building, there is a survey report, right? It's not the responsibility of the RV to check whether the survey report is correct. Sometimes you get the information in Xerox, in photostat copies. So you will not go and check whether those copies are true and fair. So you have to rely on the management. So you don't have to perform those procedure, but it should be part of your report. Now, compliance with relevant laws. So obviously there would be certain assets. So for example, if it is a plant in some remote area and which needs some kind of an environmental license, or there has to be, they have to follow certain laws as per the environment. So those things will be assumed they are taken care by the company. Not RV will not check all that. Future services, including but not limited. So obviously, in some cases, you have to appear in front of the courts also. But you can't say that I'm not going to come to the court if there is any litigation going on. Of course, you can say that this is beyond the scope, but in case of any litigation, the client will have to arrange for the logistics and there will be a separate fee which you will be charging for that. But as far as the report is concerned, it is beyond that scope. Any questions? Sorry, I'm slightly fast here, but any questions so far? Okay. I think it's a Sunday evening. Everybody must be hungry. So I need to be a little more faster. Okay. See, in case of tangible assets, some of the CLDs as an example, title deeds not verified, sketch plan, photographs, RVs not a surveyor, legal and other issues you will not check into, right? RVs observations are not a warranty. Obviously, you need a technical expert if you're doing a valuation of a building. Even if RV sees that the building, the structure, or maybe the condition is not giving the right perspective, he might appoint a technical expert, but RV's report doesn't become a warranty. If there are any hazardous conditions, materials, those all things has to be very clearly specified. Now, this is very relevant for all the land and building and plant and machinery values. So this is, you should always ensure that it is part of your report. Now, some CLDs very specifically which should not be used. By the way, this is as per the guidelines. Business plan forecast received from the client without reasonable test, which means RV is required to do the reasonable test, basically a due diligence. Market-related data without testing appropriateness. You can't pick randomly any number and say, you have to ensure that the data from where you're sourcing is a reliable source, right? If you pick data from VSC.com, NSE.com, moneycontrol.com, that is still reliable. And if it is XYZ.com, people will challenge it. Not done any historical analysis despite the data is available. Of course, you can't do that. One valuation approach. Always remember, you have to consider all the three approaches. Maybe you apply one or more, but you can't say that I have considered only one valuation approach. Another expert work done, but not included in the report, very obvious. Now, some asset class wise CLD examples, I'll just cover a few of them. So starting with land and building, right? So this is one example. It says we have not verified the title deeds of the properties with the records of the registrar's office, as this is beyond the agreed scope, right? RV has endeavored to visually identify the land boundaries and dimension. However, he is not a surveyor. Sale of subject property is assumed to be on the all cash basis. Financial arrangements would affect the price at which the property may sell if placed on the market. So this is one kind of example which you can put in a report for doing the valuation for a property, right? Value varies with the purpose and date. The report is not to be referred if the purpose is different than the mention. Very obvious. Plant and machinery. In this case, I am just reading the one which is underlined. It says the representation of the owner, client, their management, and other third party concerning the financial data, operational data, and maintenance schedule of all the plant, machinery, and equipment tools. Obviously, whatever information will be given by the client, that is what you will consider as far as the maintenance or the condition of that particular asset is concerned. IB expressed no opinion how closely the actual results will correspond to the projected forecast based on the budget's project forecast. Basically, if you are valuing a plant, and let's say if it is a machine which is going to, for example, manufacture mobile phones. The capacity of the machine is to manufacture 100 mobile phones on a daily basis. And there is a forecast, there is a schedule which has been given to you that which says that the capacity is 100, but we are manufacturing only 80 mobiles per day, right? And the forecast is that they're going to manufacture 80 mobiles for the next 6 months, for example. So you will rely based on information given by the client. You will not actually check whether the forecast is being. So you have to make it very clear that the actual results, maybe it be only 50 mobiles a day. You will not be able to corroborate that with the actual and the forecast given by the client. SFA, I think here it's very clear that the RV is not an auditor. So there is no specific assurance done by the RV, right? There are certain scope and limitations which would be maybe depending on which could be either the totality level or in the parts. So that depends. So you have to put that context specifically depending on what documents you have received when you were doing the valuation. So those things should be very clearly highlighted. Unavailability of information on the valuation date. So liquidation, CRP, very simple example. If you don't have that information, so if it is before engagement, maybe you can take a call not to take an assignment. But if it is after the engagement, so you have to make it very clear that what information was shared by the liquidator or the RP, and whether that was enough for you to perform the valuation assignment. Great. Sorry, I have to be a little fast here. Maybe any questions we can take. We have approximately 8 minutes now. Anybody was not aware about CLD at all? Anybody who has not seen the guidelines at all? Anyone? So all of you were aware. Anybody, any other questions, clarifications, any thoughts, any feedback?
Sir, one question is there that
Yeah, please go.
that if like in the previous three disciplinary cases, we have seen that few of the information was missed out by the RVs as per the IBBI. Even though there is no guideline that those should form part of that or not. So in the MRL which we take from the client or the EL which we take from the client, so will that also form part of this? Or suppose if in any case, the valuer got stuck. So we take something from the, valuer, from the management, or how, what is the, like, what are the key points which we should take in the MRL or the EL, which safeguard our interest?
More than MRL, Sanketji, my view would be, if you are not able to get the entire information from the client, put it in the valuation report. Say very specifically that these are the information which we requested but were not received by the client. And this has additionally been kept it as a part of the management representation letter also, that you can put it. But the important point here is this should get reflected in your valuation reports.
And one more point is that can we also revise our valuation report? Suppose if we have given a valuation report, okay, and like we forgot to say mention anything, any annexure or something like that. Client has used that particular report, okay, like he has used that report in MCA or in IBBI or somewhere else. Can we revise that particular report saying that these things was missed out in my previous report? So these are the addendum to that particular report or something like that. Can we do so?
Two situations. The first situation is that if your revision in the valuation report is going to impact your valuation, then my answer is no, you cannot. Then that would be a separate report altogether. Because you are revisiting the numbers, you are changing the valuation, it will not make sense. Then you have to basically justify that this is an additional or an addendum to the earlier valuation report. This has changed. My suggestion should be this should be a separate report altogether. Second situation, where if you forgot something to attach as an annexure, add in the report or mention, then that could be as an addendum. But there is a risk. The risk is that if somebody has already taken a decision, okay, in that case, then people might come and challenge you that why did you share this information with us? For example, there was a forecasted numbers, okay, and the forecasted number showed a growth of only, let's say, 15%. The actual growth actually when it came after 3 months, it was only 5%. For example, very hypothetical example, you will be challenged, Sanketji. So in this case, you have to take on case-to-case basis.
And can we cancel our issued report also?
How can you cancel it if it's already issued?
No. Like after giving the reason that some additional fact has been disclosed, which was not earlier disclosed.
Then you prepare a new report altogether. That report was based on the facts which you received at that point of time. After 3 months, if the facts have changed, the report will change, the value will change.
I think the IP reports are a little bit riskier as compared to the normal one. Even the normal are also riskier, but the IP cases reports are a little bit risky affair.
I agree. In fact, all the 3 disciplinary cases which we discussed today were all because of the CRP and liquidation cases.
And even though the fees is also not that much high, like practically we speak about, so the fees, quantum of the fees which the RVs are getting as an individual RV, if you talk about, so that fees is not that much high as compared to the risk which is involved, as well as the quantum of the work which is involved, and as well as the physical verification which is involved. Because
Sanketji, I'm sorry to interject. This fees is a very sensitive matter. And previous CEP sessions, I know we had multiple discussions on that. It's a never-ending topic. So I'll just no, one second. No. The reason is I can see other people also who has some question. Let me first ask them.
Sure.
If they don't have any other question, then I'll come back to you. Sadbir ji.
Sir, my question is, as we are enabled with banks,
Hmm.
we know which is the bank, where are the branches. We go and contact the concerned person and get the work. Regarding IBBI, where we should approach to get the work? From the last 3 years, we are doing only CP, and this and that, no work. In banks, if we do not get work, we report to higher
The
authority.
question of the question.
They give work on rotation basis. Now here, there's no work. Should we contact to IPs? Should I contact to CAs or to whom?
Sadbir ji, like Sanket ji was asking.
Continue to give the fees and this CP and this and that. And
Okay.
only decide that I am IBBI qualified registered valuer.
So
Can you say
Sadbir
that?
ji, I'm just okay. Once you finish, are you done? I mean, you can finish first. Okay. So Sanket ji asked a very right question about fees, and this has been discussed multiple times in the previous session. The second question which you're asking about the assignment is also very right. Okay, and it's a very valid question, very valid situation, and I appreciate, empathize, because I am exactly in the same situation. Now, before we get into that discussion, I want to ask the audience, are there any questions for CLD or the disciplinary cases? Because let's first close the topic before we diverge from the topic. Anybody, any questions on CLD or the disciplinary cases? Any clarifications?
Sir, I have one question regarding the date. What happens is when we are certifying some bank valuation, the banker is giving some mortgage loan for 3 years, right? And he's saying that if this report is valid for further 3 years, that is what their perception is. And they don't renew the report till 3 years. And what we write in the in our report, 3 dates as per IVS, and we write clearly that this report valued and the value is valid for 90 days further.
But why do you write that? That's what we discussed also. You cannot write that. You cannot write. You have to just say that the valuation of the asset is as of the valuation date. Now, if the banker wants to take a call that he wants to keep this valuation sustained for 3 years, that is their call. But you as a valuer, your report is, your value is valid on that valuation date for eternity, I think, based on the conditions and circumstances in your report. So I would suggest please refrain from putting that statement.
I am extending that further for the 1.5 months, that is 90 days, unnecessarily.
Don't do that.
that is the value, no?
No, but I would suggest please don't put that the validity of your value is for a certain time period. That will not hold good. If you look at this IBBI guidelines also, it says very clearly, you can't say that.
Okay, sir. Thank you, sir.
No problem. Anybody else? Okay. So I think we are already done with the timeline. 2 questions pending from Sadbir ji and Sanket ji. One is how to get the assignments and second is the fees, correct? See, everybody will have different views over here. As far as assignments is concerned, I think the best way is to get empaneled with all the banks. And again, the banks have certain conditions. You should have minimum 3 years of experience. Nowadays, banks are asking for mandates. Get associated with any RVEs if that works, right? Or maybe there are ARCs, there are NBFCs. There are a lot of people who need support, help from RVs. So it is again something based on your marketing skills, business development, how you can actually get more and more work. That is one thing. You can start writing articles. You can start posting some kind of value-added information further so that people start knowing you. Be part of some conferences. It has helped me a lot. So that is one way to actually build a network and get some assignments also. So these are good ways to do it. I hope that helps Sadbir ji to some extent. They might sound a little diplomatic answer, but yes. Sanket regarding fees. So I have done so far, been part of 2 assignments in CRP and liquidation. आज तक मुझे पैसे नहीं मिले.
नहीं, मैंने भी एक किया सर, अभी तक में पैसे नहीं मिले, बस मैं मेल कर रहा हूँ उनको, वो कुछ आंसर नहीं देते हैं मेरे को पैसे के लिए.
In fact, you won't believe, in my assignment, I said 50% in advance, 30% in draft report, 20% before submitting the final report. And when I shared the draft report, the RP calls me and says, "Sir, मेरे पास पैसा नहीं है, कुछ आया नहीं अभी तक. जैसे ही पैसा आएगा मैं आपको दे दूंगा." अब मुझे बताइए मैं क्या कर सकता हूँ? So I think that is part and parcel. One thing I can say, based on others' experience, because I haven't got my money yet, but other RVs, they did mention that I think we all are professionals and people will not take away your money. So whenever they will get the money, definitely later, without interest, obviously, you will get your money back. You will get your money, but it might take a little longer time. That's the only thing.
This is exactly what happened to my case. So the RP said, कि सर वो रेजोल्यूशन एप्लीकेंट आ रहा है, वो जब आ जाएगा वो पैसा दे देगा, आपका पैसा दे देंगे. वो कब आएगा कोई भरोसा नहीं है.
Absolutely, yeah. It's very. In fact, RPs themselves are struggling a lot. I know an RP who hasn't received his fees for last 1 year.
Yes.
Imagine. So everything goes from your pocket, and then you have to wait. Anybody else? Any last questions? It's already 2:04, and we can end the session otherwise.
For the very nice class, sir. Mainly the cases which you have discussed.
Thank you so much. I hope I was able to add some value to all of you.
This was very informative session. Thank you very much, sir.
My pleasure, Mahendraji. My pleasure. Thank you so much.
Thank you so much. Thank you so much.
Thank you, sir.
One more question.
This is Anthony.
I think somebody had a question.
Yes, sir.
Thank you,
No,
Devashish sir.
हाँ सर, हम लोग जिस तरह वैल्यूएशन रिपोर्ट बनाते हैं तो उसमें मार्केट वैल्यू लिखेंगे और रियलाइजेबल वैल्यू हो गया. क्या हमें ऑक्शन वैल्यू बैंक रिपोर्ट में लिखना चाहिए कि नहीं?
ऑक्शन वैल्यू?
यस सर.
पर ऑक्शन वैल्यू तो ऑक्शन के बाद पता चलता है ना, मतलब एक वो उनका जो एक वैल्यू होता है, आई थिंक व्हाट इज दैट कॉल्ड, इसके लिए ईएमडी भी लेते हैं वो.
डिस्ट्रेस वैल्यू.
डिस्ट्रेस वैल्यू.
डिस्ट्रेस वैल्यू. हाँ
सर, डिस्ट्रेस वैल्यू इज डिफरेंट.
नहीं, आप वो ऑक्शन वैल्यू कैसे लिखोगे? आई एम जस्ट ट्राइंग टू अंडरस्टैंड.
मार्केट वैल्यू का 70%.
हाउ कैन यू जस्टिफाई 70%? इज दैट द मार्केट प्रैक्टिस?
सर, मैंने जो क्लासेस में पढ़ा था, विमल सर ने पढ़ाया था हमें, उसमें उन्होंने 70% बताया था. 30% कम कर देते हैं मार्केट वैल्यू का.
नहीं, एक सेकंड.
For the bank, normally we give only 3 values: the fair value, realizable value, and the distress sale value. Some banks, they also ask for a liquidation value. If the asset is likely to go for liquidation, or they are contemplating that, then they ask for liquidation value. Some banks, they also ask for insurance
value भी तो सर nearly auction value के बराबर होगा.
सर ऑक्शन वैल्यू जो है वो एक्चुअली बैंक का एक ऑक्शन का कुछ साइट है जहाँ पे बैंक का जो ऑक्शंस होता है उसका वैल्यूज निकलते रहता है. So for the purpose of ascertaining the fair value, sometimes you can fall back on the bank auction portal. बैंक ऑक्शन का पोर्टल है, वहां से आप you can take a clue from there.
नहीं सर, मैं वैल्यूएशन रिपोर्ट की बात कर रहा हूँ. आई एम टॉकिंग अबाउट वैल्यूएशन रिपोर्ट. शुड बी मेंशन ऑक्शन वैल्यू और नॉट?
No, auction value is a bank to decide, because what they will do is they will I understand I think I understand you are meaning the reserve price. So yes, the reserve price is something which banks have to decide. It is not for the valuer to suggest what should be the reserve price. That's what my understanding. I may understand corrected also.
I think sir, जब हम बैंक के लिए वैल्यूएशन करते हैं तो ऑक्शन वैल्यू मेंशन करना चाहिए.
If it is part of your this thing appointment that they want this, because see, अब जब IBBI में आप जाते हो CRP liquidation, it says very clearly fair value, liquidation value. Companies Act में if you are doing a valuation, आपको पता है कि आपको fair value देनी है. But if you have been appointed by the bank and if they are asking for it, then definitely you have to provide the auction. It's part of the engagement. And then you should have a certain logic कि 70% कैसे आता है. वो एक आपके पास अगर लॉजिक क्लियर है तो देन आई थिंक इट शुड बी फाइन इफ इट इज अ रिक्वायरमेंट ऑफ द एंगेजमेंट. बट प्लीज रिमेंबर, नॉट एज पर IBBI and Companies Act. If it is as per the act will supersede everything. I hope that makes sense.
Yeah, absolutely clear.
Sir, what is the meaning of placing distress value in valuation report for banks?
Anybody from land and building would like to answer that?
Distress value is utilized by them when they are contemplating. Suppose they want to do a out of court, what they said, this some kind of a restructuring. So if they do a restructuring, they can take it on a going concern basis, get some resolution applicant, or they can decide to take it to NCLT or some other court for liquidation. So if they take the liquidation route, then they find out, okay, what should be the distress sale value? That is the rock bottom price. Or sometimes, they do the settlement. If the one-time settlement, OTS. So OTS the distress sale value is the benchmark. Below that, they cannot go.
Sir, exactly, sir. Your last line. Below the distress value, they cannot be go. But distress value can be, because एक distress value का मतलब है कि हमने emergency conditions में कोई भी property बेची है. हमारे पास customer नहीं आए, willing customer नहीं आए, no armed long जो मुझे याद नहीं आ रहा सर इस समय. मतलब मेरे पास customer नहीं है, कोई भी customer आ गया, मुझे इतना पैसा चाहिए ले लो. तो हम कैसे डिसाइड कर सकते हैं कि उस समय कितने customer available होंगे? That will be better कि आप auction कर दें.
Distress means कि इतने में तो value.
Actually, I would like to differ here. Auction का एक पूरा process होता है.
Yes,
आप due आप time देते हैं for the asset के buyers को आने के लिए. Market में information आप proper जो है देते हैं, and the due time is given, right? For the intended buyers to participate in a particular process.
Yes, sir.
जब हम distress की बात करते हैं, you don't have time at your hand. You are looking at immediate disposal. आप immediately liquidation asset को liquidate करने की बात कर रहे हैं.
Yes, sir.
So that is the basic difference between auction and a distress sale.
सर आप बिल्कुल सही हैं, लेकिन जब liquidation में या distress value में हमारे पास customer नहीं होगा, तो हमारा जो हम मेंशन कर रहे हैं 20% या 10% जो भी, तो उससे कम पर भी वैल्यू जा सकता है. जैसे सर ने कहा कि इस वैल्यू से नीचे.
ऑक्शन में क्या होता है, आप जब वैल्यू सेट करते हैं एक पर्टिकुलर एसेट की, अगर मान लीजिए आपको उस वैल्यू पे एसेट ऑक्शन नहीं होता है, तो देन देयर इज अ पर्टिकुलर प्रोसेस कि आपको उस एसेट वैल्यू को अगर नीचे लाना है, तो आप प्रॉपर अप्रूवल्स के आपको अप्रूवल लेनी पड़ती है, फिर आप उस ऑक्शन वैल्यू को नीचे लेकर के आते हैं.
सही बात.
आप अपनी मर्जी से उसको नीचे नहीं कर सकते हैं, वो ऑक्शन के केस में होता है.
यू आर 100% राइट सर. लेकिन डिस्ट्रेस वैल्यू को हमें क्या प्लेस करना चाहिए या नहीं?
डिस्ट्रेस वैल्यू एज अ मैटर ऑफ रिक्वायरमेंट एफआईज मांगती हैं, 3 वैल्यू मांगती है. वन इज फेयर मार्केट वैल्यू, रियलाइजेबल वैल्यू और डिस्ट्रेस वैल्यू. इट इज पार्ट ऑफ द एक्सपेक्टेशन व्हिच द एफआईज हैव फ्रॉम द वैल्यूअर. सो एज अ जनरल एक्सपेक्टेशन में डिस्ट्रेस वैल्यू मांगती हैं. तो डिस्ट्रेस वैल्यू का कोई बेंचमार्क होता नहीं. अगर आप आज एसेट बेचने जाएं और आपको बायर ना मिले, हो सकता है मिले या ना मिले, तो आप मिनिमम वैल्यू कितनी आप लगाएंगे उस एसेट की आज की, अगर मुझे उसको इमीडिएटली लिक्विडेट करना है. दैट इज डिस्ट्रेस. You are not giving that time.
हमें किस चीज को डिस्ट्रेस वैल्यू के आगे हमें कुछ मेंशन करना चाहिए सर?
मतलब मेंशन
है माय ओपिनियन कि अगर डिस्ट्रेस वैल्यू मैं किसी भी फेयर मार्केट का 20% ले रहा हूँ, वो 80% ले रहा हूँ, तो दैट इज नॉट 100% राइट, क्योंकि हमारे पास कस्टमर नहीं है, हमें बेचना जरूरी है.
नहीं, बेसिकली एक्चुअली अगर हम जो बोलते हैं मार्केट में प्रैक्टिस, आप कहते हैं कि 70% ऑफ द मार्केट वैल्यू एज डिस्ट्रेस या 70-75% लेते हैं. वो जो हम लेते हैं ना, बेसिकली उसके पीछे भी एक अगर आप बोलोगे तो एक स्टडीड मार्केट स्टडी होनी चाहिए कि मार्केट में जो इमीडिएटली एसेट बिकते हैं वो कितना डिस्काउंट पे जाते हैं. बट हम 75% इसीलिए लेते हैं बिकॉज एक जनरल मार्केट प्रैक्टिस है, इसीलिए. एल्स देयर शुड बी एक आप स्टडी करें कि मार्केट में अगर कोई डिस्ट्रेस सेल हो रही है तो वो कितने डिस्काउंट पे हो रही है. देन अगर आपको उसके बेसिस पे देना है, आपको बेसिस फॉर्म करना है, आप वो भी कर सकते हैं. दैट इज एल्स जो वैल्यूअर्स कर रहे हैं वो एक मार्केट प्रैक्टिस के पे कर रहे हैं और कुछ नहीं है.
I think let us stop here.
Changing from bank to bank.
I think sorry. Let us stop here. Yes.
Distress value is
maybe. Sarvesh ji, Mahendra ji, I think.
Sir, when party gets NP account, they take the valuation under SURFACE Act. And if they want to sell, the bank want to sell to their close relative, they get that the value should be at lower side. Simply. Otherwise, all at NP accounts, there is again valuation under SURFACE side. That is the thing.
Correct. Thank you.
Then it is published in papers and for auctions.
Correct.
Thank you.
Good. Mahendra ji, you had something?
Yes, sir. If the is special property and there are restrictions, restricted market is available, that also should be considered in distress calculation.
Yes, yes.
Further, your time frame is limited. All the transactions are in white. So that aspect is governing aspect for distress value calculation in case of auction property.
Correct, correct. Very good points. Great. Thank you so much, everyone. I think it was a very wonderful session, very interactive, very informative. I think I've a lot of takeaways for myself. So thanks to all of you. Over to Surendra sir, Kajal ji.
Yes, sir. Yes, sir. So we have come to the end of this CEP. Thank you, everyone. And thank you, Kukreja sir, for taking this session and covering the topic very nicely. Particularly the case study of IBBI's disciplinary proceedings was very wonderful, and it should be useful to our participants. Thank you, participants, for participating in this CEP, and please share your feedback and also give us topics for our future CEPs. Thank you, Kajal. Thank you, everyone. Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you, sir.
Okay. Thanks, everyone. Bye.
Thank you, sir.
Thank you. Thank you.